I know. I have to go back. Welcome to day 2 of the IAASB CAG meeting. This morning, we're going to talk about LCEs, less complex entities. This is not a new topic to the CAG. We've had lots of commentary and feedback for the task force, and we're going to get an update from Kai Morton. Kai, I understand you're just entering the virtual world, so we'll wait for 1 second till we see you. There you are, Kai.
Good morning.
Welcome to the CAG meeting, Kai. We can hear you. That's a good start.
That's a good start,
and we look forward to the report back from the September 22 meeting. All right, Kai, it's all yours.
Thank you, and good morning, good evening, good afternoon. I think you have a partially virtual group and partially in the meeting room, so you're probably spread a bit around. As you said, the objective of this meeting, and as you've seen from the papers you've received, is partially 2 things: report back from the September meeting, and then also obtain your views on some of the selected topics that we've been working on and drafting in the standard based on the ED comments. And those areas relate to the ones that have been where we've received the most comments, and there are the most changes needed, like documentation, engagement quality management. We've also worked through acceptance continuance, planning, risk identification assessment, and accounting estimates. So if we move on to the next slide. Sorry. So what have we done since we last met? In September, we had a discussion with you on authority and group audits, and we've taken where we took the comments that you had forward progress in the board discussion, and also considered further when we've continued drafting those areas. With the board in September, after we had our meeting, we discussed authority, group audits, accounting estimates, and the approach to revisions of the remaining parts. The authority was important, as we described earlier, because we saw, based on the ED, that the scope of who could use the standard, people had widely different understanding, and it ranged from almost anything except listed until the very micro entities. So we've been working on that, and we obtained good feedback from you and the board, progressed that well. Group audits, as you know, we've progressed further, and we've also released an ED on the group audit. On the approach to other parts, the discussion there is around how can we be more proportionate, which was one of the feedbacks we got on the ED as well, that it's not proportionate to an audit of an LCE. So we had a discussion on the overarching how we could attack that issue, and we got some good feedback with the board that we've further progressed, and that you could see some of the results on in the papers that you see, and I explain further on later. December board meeting, we approved the group audit ED, which was sent out then January, and then we also discussed more around risk identification assessment, which was one of the areas we received the most feedback on. And also we had a discussion on quantitative thresholds in the authority. I think we touched briefly on this in September, and we got some views from you on that. We have not included a quantitative threshold in our standard, but we're working on how jurisdictions can include a quantitative threshold and give them some guidance on how that could be done and give an indication. Then we've been progressing the other areas as we see today. So if we move on to the next slide, I guess you may have seen the the group audit ED, it builds on the authority to the main standard. We didn't release the authority to the main standard again because you need. We got quite a lot of input, and we don't need that input again. What we want input on this ED is the additional authority requirements or characteristics that are specific for group audits. There are some group specific qualitative characteristics, as we also discussed briefly a little bit last time, that are in addition to those for an LCE. And we did progress further around component auditors, as I'll come to a little bit later on as well. We've incorporated requirements similar to what's in the ISA 600 that are relevant, and made that as a separate part in the ISA for LCE standard. So it's part 10, together with conforming amendments and the additional authority that the board approved in December, and is now out on an ED that close the comment period in May 2nd. So we look forward to getting comments on that back. So if we progress to the next slide, just given that we did have some discussion on this the last meeting, I'll just talk to this slide. We consider your feedback on whether or not component auditors should be included in scope for the group audit part of the ISA for LCE. We had long discussions with the board, but I think we ended up saying it around group audit. It's not always the complexity of the entity that drives the complexity of the audit itself. The more components that are involved and the more group component audits are involved, it drives the complexity around in the audit, and also the examples of typical groups that would be considered less complex groups. When we looked at them and the information from the information we got, it seemed to be that some of them may not be less complex groups, but also in some areas it seemed to be that they had some characteristics that we included in the authority, saying component auditors are involved. If those are involved, then you're scoped out, except when the component auditor is limited to circumstances when the physical presence is needed for a specific audit procedure. Some of the examples we did get was saying attending physical inventory count or inspecting physical assets, and that should not scope you out of the standard. So that's what we included in the ED. So if we go on to the next slide, so moving on to what we've been working on since we released the ED. Some of the feedback we got on the ED of the standard was that it was too similar to the ISAs and it was not proportionate to a typical LCE. There are two sides to that, or two parts to that. One is the scope, which we've talked about earlier, that wasn't clear who should be in, and therefore there were different opinions on the requirements. We've tried to tackle that through the authority, making it more clear who's in scope, and based on having a better common understanding of the entities or audits in scope, we've been working on getting the requirements right, saying that the requirements should be proportionate for a typical LCE, and that's what we've been targeting. Some of this has also, we've had discussions to see in some areas we may elevate the requirement to be less detailed requirements than we may have in the ISAs, and to be more proportionate. And in some areas that we come to, we've taken not a different approach completely, but we may have done the workflow and how things are considered to be more direct for that type of entities. So when we worked through the revisions, we had targeted feedback on some areas that we've tried to address. Then also we've looked into see what are all the requirements that we have there relevant and proportionate to a typical LCE. And in some, we've also considered the EEM. Some areas there may be EEM that has been taken out that was not needed, and other areas we've added EM where that's been asked, and also areas that we've highlighted based on changes. So the targeted areas that we've looked into now are documentation. That's a pain area, I would say, also in ISA audits. But we have tried to tackle it in this standard, also around quality management, on the engagement, which we've also been trying to address and have a suggested that we'll discuss with the board in a couple of weeks. And then we've also been working on Part 6, risk identification and assessment, and accounting estimates. So those are the areas that we will talk about now. Moving on to the next slide. As I said earlier, documentation, I think, is a pain point in every audit, knowing when have I documented enough and what's needed documentation. The feedback we got on the ED was that the documentation didn't feel proportionate to an audit of an LCE. The way that we've addressed that, we have highlighted here. I think one of the primary drivers of the documentation feeling to be not proportionate is that requirements that were there may not be proportionate, and therefore if there's a requirement not proportionate, it drives you to have documentation that's not the proportionate way. So we've looked into the requirements, as we said, and making sure that the requirements that are there are proportionate, and we've addressed that in the standards. I think that also will be helpful for the documentation. So a lot of this could also be around granularity. When we talked about requirements in, let's say, ISA 315 comparison, Part 6, the requirements we now have are less granular than in the ISAs that may feel, in fact, that the documentation, I don't think the documentation should be that different if you document it the right way, but if it's helpful to have it at the right level from the start. Also, we've proposed in the EM some specific application of general documentation requirement, and also guidance. We can provide additional guidance in implementation material for the standard, and that's also an opportunity for others to do as well. In addition, we've gone through the whole standard looking for needed specific revisions or revisions to specific documentation requirements based on duplication, relevance. Is the documentation requirement relevant, and also is it in the right place? So we've done a thorough review on that and have proposed changes based on those. We do think that this will help the documentation issue, especially if we get the proportionality of the requirements right throughout the standard. If we move on to the next slide, Part 3, engagement quality management. If you remember, we based this ED on ISA, on the updated ISA 220 and which was part of the ISQMs before they came into effect. So looking to some of the feedback we got, it may be reactions to what's already now included in the ISAs, but we also did get quite a lot of feedback that the requirements should be more proportional for typical LCE audits, meaning the ones that are carried out by a single practitioner or a small team. We've introduced scalability in this standard and to be more proportionate by having separate requirements for in situations where there is more than one member of the engagement team. So you have one part that's always relevant that would always need to comply with, and the other part, it would be additional requirements that you need to follow if there are multiple members of that engagement team. We've also looked into some of the other feedback we got. We have some other revisions and simplification of structures, and deleted some repetitive requirements and EM based on what we've done. So this is trying to address the feedback we did get. So if we move on to the next slide. Client acceptance continuance, initial audit engagement and planning, part 4 and 5, which was an area we didn't get that much feedback on or reactions on in the ED. There were general support for both parts, but there were some requests for more EM and some suggestions that how we could further enhance the requirements. So in part 4, which is around client acceptance continuance, we did get quite a lot of feedback, not only in this part, but in general around transition. In part 4, we had in the requirement that in the engagement letter or written agreement with the entity had to state that it was going to be undertaken using the ISA for LCE. We did get some feedback indicating that could lead them to auditors being hesitant to moving to the full ISAs if they would need to have a new engagement letter again. And also the ISAs doesn't specify that in the standards themselves that needs to be there. So we've taken that requirement out. I think we will have a discussion with that with the board now in a couple of weeks, but we will also, I think, this partially goes with the auditor's report, whether you need to state which standard you use, which we have not discussed at all yet. But I think if the auditors would need to have a new engagement letter or a written engagement with the entity, whether that would lead them not to transfer to the right standard is some of the issues that we've taken into account for that. We've also looked into some additional EM, especially also for initial audit engagement, trying to address some of those issues. In planning, there wasn't too much to address. We've looked into some comments we did get around going concern requirements that were earlier in part 6 that we've now relocated into this part, which felt to be more to be better placement for those requirements. And then also we got quite a big call for additional EM on materiality and also using the work of experts, which we've addressed in these parts. I think by that, if you flip to the next slide, we can then turn back to you and open the mic for feedback and views on proposed revisions to part 2 to 5.
Okay. Kai Morton.
Yep.
And if I recall, the exposure graph relative to group audits, the comment period ends what, on May 2nd?
Correct. The comment period on group audits ends May 2nd.
I think you had something like 145 comment letters on the original. So definitely a lot of interest in this. I just want to go around the room to see if there are any views, a lot of different thoughts. Klaus?
Thank you very much. Thank you, Kai Morton, for the presentation and for all the good work that the task force has been doing. It's really appreciated from our side, from Business Europe. So just a couple of general comments, and my comments are based on the views of the audit client, so to say, so you understand where I'm coming from. I think overall what you're doing is I support the general direction where you're going with this. Let's call it scalability, what you're trying to achieve here in the different parts. So I think that on audit evidence documentation and engagement quality management, I think that's fine. I totally support that where you're moving there. The documentation is tricky, of course, but it's important. So I'm full support of that. Regarding client engagement letters, I don't have a strong view on it. From my perspective, it's about communication with the audit client, that the audit client would understand what he's paying for, to express it simply. So from your side, it might be more of a technical thing, so from an audit perspective, but from the client side, it is kind of a communication to understand what it really is about, and also understand it well. Why do you apply this standard? Why not apply this standard? So that would be something to maybe to take into consideration when you make the decision there. So thanks.
Thank you. Thank you, Klaus. Hilda? Hilda, you may be on mute.
Thank
Oh,
you.
there you
It
go.
works now. Yep. Thank you. Sorry. It may be because it has been snowing in Brussels for the first time this year that technology is a bit slower. Good morning to all of you. It's afternoon here, but never mind. And good morning or good afternoon to you, Kai. Thank you very much for your presentation. And I would say thank you for taking the LCE standard to a next level. I think there was some call for some simplification, and I think in many of the subject matters that you have just discussed, you have done so many thanks for that. Just two considerations. I think overall goes in the right direction, definitely. For documentation, I think some further simplification, for instance, if something was not done, that then there is no requirement that you have to document this, would be something that some of us would appreciate. And I think we will have some comments on what will come next related to risk assessment. I think we are not here to comment on the group CE, I think that's the word, maybe the GCE. We will obviously comment on that. Very happy that you got to issue this exposure draft as well. And also happy you have included component auditors. We might have some comments on that because some of us consider it to be too restrictive for now, but that will be for a next discussion. Thank you.
Thank you, Hilda. Let's see. Mike Fritz.
Good morning. I am very appreciative of the presentation that was done. I likewise have a comment that was just mentioned earlier in terms of the engagement letter. I look back to any engagement letters we have when we're doing something in addition to generally accepted auditing standards, for instance, if it's under government auditing standards or things of that nature. So in that same line of thinking, I believe the engagement letter should indicate that we're following, a different standard. So that's my only concern.
Thank you, Mike. Dawn?
Thank you for your presentation, Kai. It's clear that you've been doing a lot to react to all the feedback that you've received, so that's fantastic. I have a few comments from the S&P perspective. The first is in the area of authority, and there is a concern about the two examples that were added of a size threshold. And the concern there is when examples are provided, there's a risk that it becomes de facto what a policymaker will use. And the particular examples that are now included are only the smallest types of entities. And so that would then mean that medium-sized entities that would otherwise fit the criteria might not be permitted to use the standard. The second point is in relation to testing the design and implementation of controls. And as you've heard from S&Ps in the past, there's concern about the requirement to test the design and implementation where the auditor is not intending to rely on them because they're known to be unreliable in the first place. And paragraph 6.3.14 now lists 4 matters where the auditor is required to test the design and implementation of controls. And so that's a concern. One of these is when the auditor is intending to actually rely on the controls, but the other 3 of these, the concerns may still apply. Plus, in practice, it will be difficult or impossible to single out controls in each of those 3 cases. And my last point is on evaluation. The standard requires the auditor to evaluate rather than just consider whether the control environment provides an appropriate foundation of the entity's system of internal control, considering the nature and complexity of the entity. That's in paragraph 6.3.6. And so for LCEs that are truly less complex, we suggest that consideration is appropriate in that particular context rather than evaluate, and that the work effort associated with an evaluation would be excessive without increasing audit quality. Thanks very much.
Thank you, Dawn. Conchita?
Thank you. I suppose the team has done a lot of work and I appreciate it very much. Overall, we support what has been done. More particulars probably much later. Thank you.
Thank you, Conchita. Asha, sorry.
Hi, thank you, Kai, for the presentation. I just want to make a small comment on the way forward on documentation. As an audit regulator, we have always stressed to the auditors that documentation is very important. So I feel that the current ISA 230's main objective, that the thought process of the audit work that the auditor has carried out should be reflected in the audit working papers, despite of the audits for less complex entities. So in addition to that, I think the form content part of the current audit document, the ISA 230, where it says that an experienced auditor having no previous connection with the audit should be able to form a similar conclusion as the audit opinion. That idea should be behind when going forward for documentation. Thank you.
Thank you, Asha. Hyson?
Yes. Also, I would like to support the work that has been done so far. I think even EFAA and also IAASB has organized a global webinar on just updating interested parts on this standards for less complex entities and auditing them. And I think, as Ida mentioned, the purpose for further reducing or having the procedures for those entities has been made, and we fully support. So regarding to the documentation, of course, it's a very important issue, but in case of ISA for LCEs, this also will consider the nature of those entities. So we support, because really will serve, and it is required by SMPs to serve to SMEs, and the scope in case of audit groups also has been resolved in a proper way. Thank you.
Thank you, Hyson. Hussein, I think you had your hand up, but maybe it went down. I just want to confirm, make sure I didn't miss you.
Yes. Sorry, Jim. Yes. Just I have one small issue raised for documentation. In paper, it's mentioned to leave some part for professional judgment. I think it's good to determine put some requirement to determine the border for documentation. If documentation parts is left to professional judgment during the application of standards, I think we maybe couldn't see the sufficient documentation. Therefore, the border, the line should be defined clearly. Which part of documentation should be left to professional judgment, also defined clearly in the part in related part. Thank you.
Thank you, Hussein. Okay, Morten, before I just want to go around the room, I see one 10 card up, but anyone else? I know this has been quite the challenge for the LCE, what to include and to what extent to include something, but on evidence, documentation, EQM, or client acceptance. While you think about that, Dave, I'm going to go to you.
Thanks, Jim, and Kai, thanks for the presentation and for all the work that you're doing on this project. What I have to say is actually going to be a repeat of what Klaus and Mike have already talked about with respect to the engagement letter. It's my understanding in some jurisdictions that assurance providers operate under evergreen engagement letters, and so they don't get a new letter every year. But it does seem to me, as it's already been expressed, that if we have a new standard that we're going to be auditing under and reporting under, that having that clear understanding with the client is important. And I know, again, in some jurisdictions, this represents the legal contract between the auditor and the client. And so just making sure before we finalize that decision that we've taken into account all of those considerations before concluding, I think would be important. Thanks.
Thanks, Dave. Kai, I think I'm going to send it back to you for any comments you have.
Thank you, and thanks to all the people that express their views. And I think I'll start with documentation. It is a tricky one, as I said. It's also a tricky question, or a tricky area in ISA audits, finding the right balance. We have stayed true to some of the same principles that we have in the ISAs, following the same, let's say, experienced auditor principle, that you need to document so an experienced auditor could understand what you've done and the conclusions reached, that's still in there. We haven't really, we did consider having a requirement, like Hilde said, whether if it's something not done, that it not needed to be documented. In a way, that should not be necessary to be there. It should be driven directly based on your evaluations and documentation of what you've done. If there is something that's not been done, then that should fall out of your documentation. So we haven't included that area specifically. Also, I think that we did have some concerns whether that would drive the right behavior. So we had concerns of having that specific comment in, and I think based on some of the feedback we did hear around professional judgment on level of documentation, there are different views on that as well. So we have stayed in the standard, we have stayed true to the principles we have in the ISAs. It's more that we've made sure that the requirements that would drive the documentation are proportionate to the entity. So by that, you indirectly also change the documentation, or at least the felt documentation, which is probably more of an issue than directly what's being asked for. We also have some specific documentation requirements, so we feel that we are well covered in the area of documentation requirements in this standard. On the engagement letter, this is the first time we bring it to the board. As I said, we did have discussions on this in the task force, and this is where we landed after those discussions. That's not saying that's where that position may change also based on the board discussion. Some of the input to the discussion was also based on the fact that the ISAS does not have a specific requirement, does not have a requirement to include that in the engagement letters, and we currently don't. We end up, and what we are doing with this standard, we should end with an audit of similar quality and end up with the same conclusion. And that's some of the rationale behind where we landed on that. I'm certain that we will have discussions on that with the board in a couple of weeks, and also whether that is something that's potentially would then also be a change in the ISA, saying that you would have a state that that's the standard you would use or not. But that's, we can see there's also the opportunity here for jurisdictions to add that in as a requirement. If or when they open for this standard, that they would say that you have to state the standard that you're using in the engagement letter. As I said, some of the reason for this is also we don't want to signal that this is an audit of a lesser quality or a lesser grade of assurance. It goes with some of that messaging. So, but I think I hear the concerns. We'll take those back and consider how this should be dealt with. We did get some input on risk identification and assessment. I'll come back to that when we talk about part 6 later on. On the authority, the concerns that some of the examples that we did include in the material, not in the requirements, but we're saying that we're trying to signal what type of engagements we considered when the standard was drafted, and that we're saying that it's something that jurisdictions need to consider when they evaluate or consider if to use the standard, and to adjust for jurisdictional differences. It's based on quite a lot of discussions we've had, and we feel it's right to give an indication of an area. There are, as you said, there are 2 examples. Whether those become de facto rules or what, I think that's also then up to standard setters or regulators in jurisdictions to decide, but they need to be comfortable for the type of entities that this standard should apply for. So in the end, it's up to their decision, but we then indicate what our thinking was when we developed the standard. I think I've then responded to the comments that we heard. So if there are no additional comments, we could move on to the next area.
Kai, I think you can move on. I think this might be the CAG feedback might be a good preview for some of your discussion at the board meeting in a couple of weeks. So we'll go to the second part.
Thank you. The next area is an area that we've been working on quite a lot, and probably was this maybe the one area we did get the most feedback on in the ED, except for the group audit question. And the feedback was that part 6 was not proportionate to a typical LCE, especially around the entity system of internal control and the process for risk identification and assessment. So we've been working on this area a while with the board, trying to find the right approach and the right level to be at, both to make sure that we identify and assess the right risks, but also that we don't over-engineer and that we have the right requirements that are proportionate for a typical LCE. What we have done in the proposed revisions, as you see, around understanding system of internal controls, we've looked into how this the type of entities that typically that would be used the standard for, how they look and what would be the typical approach of doing some of this, so that we've turned the understanding of the entity's risk assessment process and the process for monitoring controls into direct inquiries to management, that you have to do inquiries management around those, and that's where you get some of this information, and then you would follow up on those, of course. Also, we have then a requirement to understand the process to prepare the financial statement. We have, based on some of the feedback also received, we have combined the identification and assessment of risk of material misstatements, which is in practice, I think for many is done combined. We have removed the requirement to consider the effect of inherent risk factors. The concept, in a way, of considering is there. We have now EEM that should be that's something that to help you to evaluate your risks, but it's not a specific requirement to consider inherent risk factors on all of them. Some of the other revisions are including some additional EEM to address some of the proportionality and to provide clarity on some of this area. And we're also taking a step back to make sure that are we at the right level, making sure that we're not requiring the auditors to do too much that's not relevant and doesn't help them in the audit. I think we have done quite a lot on that, and feel that we've taken the step to where we think we can be, but also then interested in hearing if there are some additional comments. It is an area that there are many different views, but since we have a risk-based audit, the whole audit and the result of what we do is based that you identify and assess identify the risks and assess them, and decide the way there from there. So it's the turning wheel of the audit, so to say. So if you don't get this right, you may not get to the right end result. So it's a really important area. I think with that, we can move to the next slide, which is then asking for views on the proposed revisions to part 6. So I can turn back to you, Jim.
Thank you, Kai. You have a few tents up, and I think this is an area like everyone to focus on. Tara?
Thanks, Kai, for your presentation. I think we talked about this several times. You could have a relatively simplified entity that does complex things, so the balances were quite complex. And I just wanted to make sure with removing some of the requirements, like is something going to go through the safety net in some of those entities, or is it sufficient language in there? I did see some, the auditor has to confirm that the LCE guidance still applies after looking at these processes. That language is going to continue, right? And just, it's not going to be that inherent risk part is going to, not going to thwart that sort of effort or aim.
Thank you, Tara. Any other cards? Greg?
Thank you, Jim. A general comment with respect to public sector considerations, which are present, but are also present in the underlying source ISAs. So there's extracts from 315 present in this document that we were provided, but not all references to public sector considerations have been extracted. So I just encourage the task force to think about whether or not there could be a more linkages made. I don't ask for repetition of content, but if, for example, there's going to be references out to ISAs for particular circumstances, perhaps there could just be a reminder to the fact that there's additional considerations located elsewhere within the ISAs rather than repeating the text, because it is right now, it is an exact copy paste of the text that's found elsewhere. So, and then unrelated, I just came across a word that caused me pause in paragraph 643E, which talks to the auditor's intentions to rely on controls, but instead of the word the auditor intends reliance, it says the auditor contemplates reliance. And my understanding of the word contemplate is not as firm as an intention. So perhaps it's just a drafting issue, but I wonder if contemplate should be worded more assertively for references to the auditor's intentions to rely on internal control. Thank you.
Thanks, Greg. Klaus?
Thanks. Generally, I support the approach taken here by the task force to develop the parts on risk identification and assessment. From my point of view, I think it's imperative key to have it fit for purpose here. And if I take the typical LC, it would be an owner-led company where management and the owner is the same person. So that would be one of the real micro entities where you wouldn't want to expect to find any type of internal control because it's controlled by management and the owner. So it's really to make sure that everything is the ISAs today, which applies on scalability, is still there also in the future. But I think this goes right in the right direction. So to say, it seems to me like it's a more direct language, so to say this is what you expect to find in an LC. I also pick up on Tara's comment, because I totally agree with you that the imperative here is to find a balance so you don't lose anything regarding the risk identification, risk assessments by entering into an entity that is complex. So it's the interaction between the authority and then what you do in the core here regarding risk assessment. But overall, my understanding of this is that it goes into the right direction from my understanding what typical LC would be.
Thank you, Klaus. Hilda?
Thank you, Jim. Thank you very much, Kai, for your explanations on this matter. We surely appreciate and see that you have looked at this matter of risk identification and assessment and made quite a number of adjustments to make it more proportionate to the environment of a less complex entity. So that is very much appreciated. We can relate to some of the comments that Dawn made, which are related to, wondering, why would there be a requirement, for instance, to test the design and implementation controls if the auditor, based on his understanding of the environment, he has decided not to rely on them. We are a little bit mesmerized about this, and also about this need to evaluate the control environment over and above, the understanding and considering to do this. So just some thoughts that we would like to leave you with. Thank you.
Thank you, Hilda. Kai, I had just a general question in terms of the auditor's role, and I think in certain jurisdictions, it's fairly common for the auditor to assist in the financial statement preparation. But this whole LCE standard, are there any coordination efforts? Has anything changed in terms of IAASB and some of the requirements for something like financial statement preparation? I just wondered if that was something the task force had discussed. I do have a couple other tents here. Paul?
Thank you. I can't decide whether this is a good question or a dumb question. I'm sure the answer to that will become evident quickly. When I think of all the planning that goes into this, and risk assessment was kind of the trigger for me. A lot of that happens early on. Well, risk can change as the year progresses. And I was trying to think of possible scenarios where a less complex entity maybe trips over the line, is no longer less complex. An owner-controlled company that starts a new product line that has very judgmental revenue recognition standards associated with it, or maybe the owner says, "Hey, I'm going to start trading cryptocurrency through this company," or something like that. So I guess my question is, does the standard as designed, does it cover that situation of moving from LCE to non-LCE, or is it just, hey, you then just fall back into the other standards?
Thank you, Paul. Yeah, I think that wouldn't fall in that other category of questions. Let's see, anyone else? Dave?
Kai, thanks for explaining these proposed revisions in this section. As you think about the consideration of internal control in an LCE, I do think it's important that the auditor consider that, as has been previously mentioned, often what the auditor will find is there aren't a lot of controls. There are probably very high level controls. There's probably a lack of segregation of duties and those sorts of things. Which brings me to sort of my question is, will there be examples to assist the auditor in assessing those situations and maybe thinking beyond internal controls? Have we identified certain fraud risks that they should be aware of and be thinking about as they execute the audit? Or maybe at the extreme, is the entity not auditable, or would a qualified opinion be more appropriate under the circumstances as you consider the system of internal control? So I just didn't know if that was there would be guidance to assist the auditor, and not to just assume that you can, just because you've been hired to do an audit, that you can finish an audit and issue a clean audit opinion.
Thank you, Dave. Kai Morton, I believe that's all the questions we have on the floor for this section.
Thank Thank you. I'll start with the last one. Whether you end up in a situation having a non-auditable situation, we follow the same principles as we have in the ISAs, having the preconditions for an audit, and you need to make sure that they're there so that you should not come into, if you come into a situation where it's non-auditable, then you should not then form a false opinion. So it's we're following the same principles in that, and there are safeguards in the standard, so to say, to make sure that you reconsider that situation during the audit. Around examples, that is also something we have worked on a little bit in the EMs, but it's also something that may be added in additional implementation material, implementation guide, or something additional that could come out. The feedback that we hear generally on the ISAs is when you start including examples in guidance or in the application material in ISAs, that's when it starts to become difficult to apply. So I think by having some of this material outside of the ISAs, it also, or not outside of the ISAs, outside of the standard, it gives more room to how to write it and to give better guidance. I think there's also room for then jurisdictions to have their additional guide on some of this. Around fraud risk, we have had discussions and have included some material on specific areas to be considering in these type of entities. There is also a project going on fraud right now, which will also address some of this. So we don't want to move too much ahead of the ISAs on some of these issues, but we also want to give guidance and help the practitioners when doing the audit, doing the right thing and indicate the right risks. On the fraud risk factors, that was one question that was asked by someone else as well, that we have we've removed the requirement to specifically consider and document against that set list of the inherent risk factors, but it's now included in guidance on what to consider when assessing the inherent risk. It's the same concept, but it's less granular, so to say, and the same principles are there, so you should get to the same response. I think the other part to this is the question that is there is based on what you've done, are you still an LCE? And that is something that needs to be considered throughout the audit based on the risk identification as well. If you based on your risk identification, you need to reconfirm that you're still an LCE and that nothing has changed. And that is also, I think, a response to one of the other questions that came, whether there is something happening during the audit. The entity enters into something more complex, or the entity changes. You need to then make sure that you're still an LC, and if you're not, then you need to transition to another standard. The other part to fraud risk factors, as I said, we have the concept in there. We also have an appendix to the standard that has the fraud risk factors there. So they're not lost. It's just that the approach is less granular, so to say, to be more proportionate to the type of situations that you would come into. The other question or comment that came up a couple of times, and I think just to highlight that, it's really vital that you are an LCE based on the requirements that we have, and that's to be reconfirmed. And as Klaus also said, that's driving where we end up, and that's also the reason why we have ended in this situation, given that this is the proportionate, and that's also why we highlight the need to reconfirm that you're still an LCE, given that the authority now are more explicit, or not explicit, gives better direction on what a typical LCE is. I think it should be easier also for practitioners to decide whether they're in the right standard or not, and that gives them more direction. On the specific level of requirements that we are requiring understanding on or not, we have heard some of the concerns that have been raised, whether you should be requiring that understanding or not on these type of entities, because you know you're not going to rely on them. But we need to, it's important to understand the whole risk, and if some of these requirements are not really only to identify whether you're to relying on controls that are not there, or relying on the controls that are there or not. Some of these requirements that are here are also making sure that, has been highlighted by others, that some of the key controls and some of the overarching things actually are done. If the controls are not there, more likely than not, there should be an additional risk. And some of this is then what this also makes sure that we are identifying the areas to help plan the audit in the best way, and what are the risks and how we should attack this. Sorry. We have had multiple discussions, making sure the level is right. We probably will have still discussions on this item also in the coming board meeting and also going forward. I take your comments and concerns, and we can see how we can look into that. We got to contemplate whether you should whether the word is right for contemplate or not. We'll look into that. I do think that we follow the wording of the new ISO 315, but we'll make sure that we look into that as well. Anything that I have not covered that is still?
Just a couple of things. I think Vili is going to interject on one of the comments. Vili?
Yeah, I think the other one was your comment, Jim, on coordination. We continuously coordinate with IAASB to make sure that there are no issues that would need further coordination, and make sure that that is happening when needed.
Thank you. Vili?
Thank you, Jim. And maybe just on 2 points that I wanted to come in. The one was the concern that was raised about the understanding of the internal controls and the testing of the design and or the evaluation of the design and implementation of internal controls. I think there are 2 aspects there. The one aspect I think we need to be very clear on is that, remember, the auditor's understanding of internal control is not related just to the fact that you want to test the controls. Your understanding of internal control, and especially when you get into your direct controls, understanding the information system, or as it is articulated in this standard, the process to prepare the financial statements, is extremely important in terms of identifying risks, irrespective of whether you're going to rely on internal controls or not. As Kai has indicated, we've tried to make it proportionate and simplify the requirements. And then when it comes to the design and implementation, remember the design and implementation is only required for certain control activities. It's only required for risks that are determined to be significant risks, for controls over journal entries, yes, for controls that you intend to rely on, and for controls related to significant transactions or related, significant transactions and relationships with related parties. So I actually think it's not that onerous. It's only those control activities that you need to do design and implementation for. And then the other point that I wanted to come in on is Paul's point about the transition back into the ISAs. Now, I please invite Kai or any of the staff to come in if I overstep here, but this is a point that we haven't taken back to the board yet. But just in principle, to remind everybody, remember that is why it is so important that we get the authority right. And that's why we've been trying to be very robust with the authority, and especially in the changes that we've done post-exposure, to be very clear on which is that group of entities on the spectrum of complexity that we are really targeting, and to try and get that right. So we want to make sure that when you apply the authority, the chance is 95% that you're going to get it right. And then we have, Kai, I think there's 2 places in the standard that we have a stand back, that as you go through, well, just check again, are you still an LCE? So having said all of that, yes, obviously there's a possibility that you might find, oops, I'm in the wrong standard. Well, yes, then you will have to go back to the ISAs, because remember, we have to balance that with the risk of inappropriate use of the standard. And when you get back to the ISAs, it's not that you have to start all over again. You can take credit for the work that you've done. However, you would have to see, you would have to get to a position where you then can say, I've conducted my audit in accordance with the ISAs. So yes, that possibility exists, but so that is how we've tried to address it, Paul, but we still need to analyze the responses that we got on that specific question as well. Thank you, Jim.
Thank you, Billy. Galen?
Yeah, thank you very much for the presentation. I have to admit, I haven't been able to spend the type of time on this that I would have liked to, but I have a question when we're talking about risks. Control risk and inherent risk, and I'm reading in section 6 here that we can perform the risk assessment in different ways depending on the preferred audit techniques or methodologies. Some people want to address risks, both control and inherent together. Other people say that it should be separated. I'm not sure in here what the position is on that. Are all risks in one basket, or are they separated? And maybe you could help me clarify that for me, maybe.
Thank you, Galen. You want to go? Okay. Kai? I'll turn it back to you.
Sorry, I was in the middle of coughing, so I had difficulties catching the question.
The CAG can do that sometimes.
Yeah.
We did the same thing to Josephine, but she's here today, so you'll be okay. So
I didn't get the.
Yeah, I think Billy might have a comment based on Galen's comments, so I'm just going to turn to Billy for 1 second here, Kai.
Okay.
Kai, you're welcome to jump in. I did hear the question, so I'll give it a go. So basically, the question was that is when you look at inherent risk and control risk, is it all in one bucket? So what we've done, Galen, is if you think about 315, the work that we did on 315, we deliberately separated out the assessment of inherent risk and control risk separately. And in addition to that, when it comes to inherent risk, we had 2 steps of identifying the risk of material misstatement and then assessing the risk of material misstatement. So when it came to this standard, what we have done to simplify it for, and again, proportionate to these types of entities, is we've combined the identification and assessment of the inherent risk. So it's the inherent risk and the control risk is separate, but we've tried to simplify it in the sense of saying that if you are not going to rely on control risk, if you are not going to rely on internal controls, which is often the case in the case of these types of entities, then your risk of material misstatement is equal to your inherent risk. So then you actually don't have to do an assessment of control risk. However, if you are going to rely on systems of internal control, then you have to assess control risk. I think I got that right, Guy, but you're welcome to come in.
You got that very right, Willie. And now I got the question, so the answer was correct.
It sounds right conceptually to me, and that's what I wanted to hear. Thank you.
Thank you.
I think there was one other comment. Sorry, there was one other comment that I did not address from the earlier ones around public sector. We have done some work trying to include the public sector considerations into the standard where relevant. We're not done, so we will do some more work and also take your comment to see how we can relate to some of the content otherwhere. We have not, though, included the concept of referring directly to the ISAs, as this is designed to be a standalone standard. So it won't include any direct references to the ISA requirements or application material. But we will, so whatever is relevant for this standard, we will include in the standard, also recognizing the ISAs are there, and that it's a helpful source of guidance to be used on any audits.
Thanks, Kai. And from a public sector perspective, maybe it would be good to have maybe a follow-up with Greg later on some of the public sector considerations. All right, I think we're ready to move to the last section, which I believe has 2 questions on focused on estimates. Kai, you ready?
Yep, I'm ready. I'm done coughing for a while, so we can move on to the next slide as we have here. Accounting estimates. That's an area we've also been working on quite a while, or changed quite a bit from what we had in the ED. If you remember back to the ED, we had qualitative characteristics scoping you out in a way, saying scoping you out if you had complex accounting estimates. We said if the entity has accounting estimates that are subject to high degree of estimation uncertainty or measurement bias, then you would not be an LCE. We did get quite a lot of feedback saying that some of these entities may have a small number of more complex accounting estimates, and that should not drive them out of the standard itself. There are quite a lot of those estimates that have a little bit more complexity into them, but there are, say, good ways of still auditing them and making sure that you get to the right result. So we have revised the qualitative characteristic, taking into account some of this feedback. And then also based on that, we needed to make sure that we have the right requirements to take into account those estimates that were earlier scoped out. So there are additional requirements in EM based on that. And we have looked into the accounting estimates part and then aligned the structure to more directly with ISA 540 to be clear on the testing approaches. We've added the requirements around disclosures relating to estimates and also enhanced the essential explanatory material to support those requirements. If you go to the next slide, the way that this would work, in a way similar to what we have for other areas, is you start with the authority. You have the prohibitions and limitations and the qualitative characteristics that we looked into now, that you would then determine whether you're an LCE, the entity is an LCE. And we've revised some of the entity or the estimate specific characteristics, as I said. So now it reads the entity's financial statements typically do not include accounting estimates that involve complex models, methods or models, assumptions or data, to align for that there could be the one-off, and that there is a judgment made whether you're still an LCE, and that's the standback requirement that we have. And it's also been highlighted multiple times on this call that there are standbacks in the standard to make sure that based on your understanding that the entity still is an LCE given your updated understanding. As I said, to take into account for this, we have added quite some requirements to make sure that we would address situations where there are more complex than what we had originally. So there is some additional requirements in this area that would be relevant for those situations, but not for all. So that's the approach we've taken. As I said, revised the authority based on the input we got in the ED and through outreach to make sure that we cover the situations that are there, and then updating the requirements to make sure that we account for the situations that we allow in the standard. So if you go to the next slide, I think then we can open for comments again. Jim, do you want to take them separately, or yeah, or you can take them together?
I think we could do either or. So if someone has comment on one or the other, I just have a clarification, Kai. If there was an estimate that, and we have Tara here, that involves an actuary, is that inherently considered complex?
That's one of the situations.
Well, you don't have to answer that quite yet, but I'll just tee that up as a general question. So any questions, Jasmine? I see your tense up.
Hi, Kai. Thank you for the presentation. Similar to the question that was just posed, is there a plan to include examples or any sort of scoping guidance on what would constitute specifically a complex method or model, and what constitutes typically, as that's the language that's used in the scoping guidance that is provided on the slide?
Thank you, Jasmine. Galen?
Yeah, your question, Jim, it kind of raises the whole notion of use of experts, right? And not just actuaries, but across the board. Again, I haven't spent the time on, is this going to be a separate so it will be outside of the IAASB as a separate document and to be referred to differently in some manner? Okay. Yeah, thank you.
Tara?
I don't know if I'm allowed to answer your question, but I'm going to say yes if I am. But then so I guess I don't mind if the one reserve calc is the only complex thing in the whole organization, as long as an actuary comes in and does the right audit procedures on it. If the rest of the audit still stays LCE, I guess I don't mind, as long as somehow whatever is written here allows for that, the audit team to be sent to that, whatever sort of expert is needed, right? And I think that's how I read it, but.
Thank you for that perspective, Tara. Klaus?
Thank you very much. I appreciate the work that the task force and Kai Morten has done on those, and I support the direction here on going on this, because this was one of the issues that where my organization had a rather strong pushback on the original ED. And simply speaking is that I think you have to be clear on the division between that an accounting standard might be complex in itself to require how to measure something, and most of the stuff we have on the balance sheet are estimates. There are very few market values, so that's what one of the critiques had. And this needs to be addressed, so to say, instead of having a specific item, say that you have a level 3 fair value financial instrument, for example, then you get kicked out because I thought that was the wrong way to go. So this is the right approach. Picking out on Tara's example, if you have a pension liability, I think that you shouldn't be kicked out of an LC either, because that's what most companies do. They promise at least some of the employees a pension. So I'm in support of this, and I also think that. So first of all, on the requirements on accounting estimates, yes, I support them. Also, I think that it's wise to do also what you have done regarding the authority, because those are interlinked to each other. And coming back to the distinction between that, an accounting standard can be complex in itself, because it's been written by very clever accountants how to measure something, compared to if you have a complex transaction, which means that there might be inherent complexities in how to measure the outcome of the transaction in itself. So there is a fine distinction between those two. And therefore, I think it's wise to also address it going back in the authority again, because I think that it's a little bit of floating issue here, but this is also coming back to if you have complex transactions in the end. It might not be the accounting standard, but it might be the transaction in itself, which means that the entity is not an LCE. So that's my whole point. So overall, supportive of this.
Let me see, just confirm, I don't see any hands up on Zoom. I think up, Paul.
Just really a few general reflections. So I guess it's really more in relation to Q4. I mean, what on the previous questions 1 through 3, I think Aoife, we're quite pleased to see the simplifications and clarifications that have been made. And as Hyson said, we will respond to the exposure draft on groups, and perhaps we're looking at possibly suggesting that that we broaden the scope there, including the components. Kind of generally with this project, again, it's quite amazing progress that that Kai and his team have made. I think from the project proposal inception through to the possible finalization of this project in December, this is possibly the quickest project that the IAASB has had from start through to the finish line, although that might get superseded shortly by the sustainability one. And it kind of harks back to what Tom said yesterday about constrained optimization, which took me back to the 80s when I was studying economics. Again, we have a little bit of a constrained optimization here, maybe not quite so acute as it is with sustainability, but there is a need to get something done in relatively quickly. So it's kind of balancing perfection and progress and ensuring, of course, on the way that there's proper due process. Aoife, as Hyson again mentioned, we had an event together with the IAASB and IFAC. It was a global webinar, and 3 of the presenters are actually on screen. I think Amy, Jasper and Kai, they were the main course of the presentation. This co-hosted webinar, we had 3,400 registered, about 1,500 actually showed up on the day for the event. And that really sort of underlined the level of interest, supportive interest in this project. I mean, it was massive. There was practically every country in the world was on the call. And it kind of, for me, it reinforced that this project is in the global public interest. It has the potential to do many things, ensure the viability of the less complex entity audit, fostering more trust, confidence in SME financial statements. If you get increased numbers of audits of SMEs, voluntary audits, contract audits, whatever. And as the World Bank Group stated at the May event in Paris last year, speaking with, of course, their donor hat on, this has the potential to help build the accountancy profession, a very important profession in emerging and transitional markets. So yeah, so I really wish you the best of luck in the next 10 months, and we can start getting ready for the finalization and publication and implementation of the standard.
Thank you, Paul. Akihito?
Thank you, James. Thank you very much, Kai, for your presentation. Let me comment also in relation to Q4, any other matters. As one of the representatives from IOSCO, the position of IOSCO is as stated in our comment letter for this project and in my remarks at last September's CAG meeting. On that basis, I'd like to share two thoughts. The first point is to reiterate a point I made at CAG meeting last September. IAASB is now undertaking several very important projects such as sustainability assurance, going concern, and fraud, which were the agenda of yesterday's CAG meeting. These projects have broader impact, including audits of listed entities. IAASB's variable resources should be allocated to each project based on breadth and strengths of stakeholders' need. My second point is regarding group audit. Group audits of public interest entities, such as listed entities, are out of scope of ISO 4LCE. However, in my understanding, auditors, including component auditors, are not prohibited from using ISO 4LCE when performing the component audits of these group audits. In order to ensure the high quality of audits of public interest entities, I think such component auditors should be prohibited from using ISO 4LCE clearly. This is a point that we IOSCO mentioned in our comment letter for this project. That's my comment. Thank you.
Thank you, Akihito. Any other comments, Galen?
Yes, I have another question. So when we were looking at PI over at IASBA, there were a couple areas that we scoped out of PI with an agreement that going forward we would take those into account. Pension audits and collective interest vehicles, I think, is what we refer to as common interest vehicles. Where would that stand? Are they scoped out of this as well, or do we know? I mean, because pension audits can be pretty big and important and not always complex, but some of them can be complex. Is there a bright line for that?
I know we have the PI presentation coming up next. So that might be part of it. Kai, I don't know if you have a perspective on that.
As I said, it is something that we need to align with what we're doing in with the PI project as well. But it's if the entity or the type of entities that you're talking about, if they would be complex and would be, I think they would be scoped out of the standard through at least the qualitative characteristics, but I think also in the prohibition. I don't remember the exact wording in front of me now, and we haven't updated all that wording because of the PI project has not finalized where they're ending on it either. So it is something that will come.
Thank you, Kai. I don't see any other cards. I think you have quite a challenge determining what's in, what's out, and with different, probably pretty strong views on either side. So it'll be very interesting to see the feedback that you receive in addition to what we've just given you also at the IAASB level. Any other final comments? And then I'm going to go to Dave.
I can
If you
just
don't mind.
respond to the question or comments we got around the accounting estimates and pension liabilities, and that's actually something that we did discuss quite a lot in the task force as well. And that's one of the examples, as Klaus said, in that many of the LCEs would typically have pension liabilities that would require an actuary to do some of this work. But that's not to say that it's a complex entity. In some jurisdictions, you even have a legal requirement to have a pension, so that it could be that it's always there. And that's why we've allowed for some of this. There are some other wording in here as well, and it's additional. We have a supplemental guide on some of this to help on the estimates, so that you would understand whether you're in or out. And some of this is also, you can almost say, what if it's part of your core business, and that's the reason why you're getting those estimates, then more likely than not, you would not be a less complex entity. If it's outside, you can enter into a one-off. It's probably also then something that could indicate that in some cases it could be a less complex entity still. But as I said, it's something that we have additional guides on for this standard as well. On the other comment from around group audits and whether that should be allowed to use the ISA for LC or not, I think that's really a comment or question addressing ISA 600. The group auditor has different ways of getting the information from the component auditors, and he would always need to make sure that that it meets ISA 600. So it's something that it's up to the group auditor to decide. So the reporting to the group auditor could be done and required to be done based on 600 requirements. But let's say if the subsidiary has a statutory requirement in its own jurisdiction, this standard could potentially be relevant for that statutory audit being done. But for the group audit and the group audit reporting, it's up to the auditor to make sure that it complies with ISA 600. So it's not that we're trying to lower the bar or anything here. It's the same, but it could be relevant for the statutory audit or an audit of a separate financial statement of that entity itself. And they also would end up in reasonable assurance, so they should give the same level of comfort, but that's something that for the group auditor to decide and require what should be followed. Back to you, Jim.
Thank you, Kai. Out of the side of my eye, I saw Dave, you had your tent up, but then it went down. Oh, back up. Okay.
Thanks, Jim, and thanks, Kai, for the presentation. This is the part of the session where I am supposed to reiterate the public interest of this project. Although Paul did such a great job of describing all of that, I'd only like to reiterate what Paul just said. I think that those were very important points. Clearly, the interest in this project is very high. The only thing I would add to that is I believe this project has the potential to drive consistency in audit execution in a very large segment of the audit market, large in terms of the number of audits that are performed. And currently, I believe that practice is fairly fragmented by jurisdiction and also by firm. And so I think this has a chance to improve the value of those financial statements and drive consistency globally.
Thank you, Dave. Tom?
Well, the staff likes to say that they'll make an auditor of me. Ultimately, I think, Paul, you're proving that I'm trying to make economists of everyone here too. So exactly, I do think that we're sort of on this project trying to attack the best part of the public interest we can. And that's why you sort of hear is like on every issue, we're trying to find what I call the Goldilocks approach, where we're just right.
And oftentimes that means we'll capture 85 to 95% of the types of transactions, entities that people believe should be in it. And I think it's about getting that balance right. The one point is IAASB continues to point out about the need for managing our resources and priorities. And I just want to say, I don't believe that we're diverting any resources from any major public interest project for the purpose of this standard. I will also say, following up on the PIOB's point, that it is in the public interest that we serve this group of standards, and that listed entities and PIs are only one group of stakeholders that our mandate challenges us to address. So that's why we believe it's important. We're very much aligned to the PIOB's point of view, and I believe we have the appropriate resources. And the sooner we complete this project, we'll have resources to deal with other major public interest matters.
Thank you, Tom. Any other comments before? Kai, did you have anything else on your side?
I have one slide left, which is just the way forward. If we flip to that, it's just has been highlighted also by Paul. The expected approval that we're still aiming for is December this year, and we are now discussing further revisions with the board in March. In May, we will get back the exposure period for group audits will end. That is planned out, so it should give us time to hopefully then include that in the expected approval of the main standard in December. In June and September of this year, we will have a full draft of the standards that we will discuss with the board. As I said, the approval expected for December, which we're still in good hopes that we will get to. So I think that's it. I would just say thank you for all the input and comments that we've heard on this call, and we'll bring them forward when we're further considering revising the standard. So back to you, Tim.
Thanks, Kai. And Kai, I'd like to thank you for being with the CAG through this whole process. We've had a number of discussions on LCE, and we appreciate that you've continued to come back. Also like to thank your task force and your staff for putting this together today. We really appreciate it. And best of luck in 2 weeks on your IAASB meeting when you also discuss some of these issues. Thank you. All right. Well, I think we have earned ourselves a break. So we are going to hold a break from now to 11:30. So then we'll come back and do the public interest entity. So see everyone at 11:30.
test. 1, 2, 3. No.
We'll give our usual 2-minute warning. Welcome back, everyone. I hope you had a great break. And we're going to move to our next topic, which is public interest entity. I believe our presenter is Sue Alman. Sue, it's good to see you. How are you doing?
Hi, I'm very good. Thank you, Jim. Can you hear and see me okay?
Yes, yes. Now, for all our speakers, we've caused them to end up coughing. So hopefully you'll be our exception and will not suffer the same, but it's a tough CAG these days. So I am going to hand it off to you and let you walk through your PIE.
Okay, well, thank you very much. And hello, everybody. Pleasure to be speaking to you about something slightly different this time. So what I'm going to talk through is the IAASB listed entity and public interest entity project. Before I get into the detail, just want to recognise the task force members that have been working on this. We've had a number of changes recently. So our current task force is myself, Chunwei Chu, Fernando Monroy, Susan Jones, and our IAASB correspondent member, Sung Nam. But I think I heard a whisper that the IAASB Deputy Chair, Josephine, is in the room with you. So Josephine was chairing up until the beginning of this year. And we also had actually the previous IAASB Vice Chair, Len Dewey, was also involved in this. So we've had a number of changes. We've also had changes on the staff front. The lead here is Kalina, with support from Vili, and I think they're both in the room with you. And we also have been recently joined by Ida. So we have a great team working on this. And it's probably worth calling out right at the beginning that we have a lot of coordination, as you would expect, with the IAASB, whether it's through staff or with the correspondent member that we have on the task force, or by people interacting during the meetings and observing each other's meetings. Clearly, this is something that crosses between the two boards, and we're working very closely together. Can I have the next slide, please? So the agenda for today I'm going to take you through the different tracks. Can I just check the slide has changed? Perfect, thank you. So I'll spend a little bit of time going through track 1, which was by giving you a overview of the significant comments that we had to the exposure draft for this narrow scope amendment project. So narrow scope amendments to ISO 700 revised and ISO 260 revised, and then obtain your views on the PI task force's initial proposals for track 1. The track 1 is expected to be approved by the IAASB in June this year, so June 2023, and is being progressed on a faster track to align with the IASB's effective date for their changes, which is December 24. The updated drafting for the proposed narrow scope amendments are included in your packs at agenda item H2, so hopefully you've had an opportunity to look at those. And we will of course be going through some of this with the IAASB in March. And then on track 2, we will update you on the board discussions for track 2 that took place in December last year. So we've been considering some of the areas in track 2 already, and then just give you a final update on the overall project and the timelines, expected timelines. Next slide, please. So if I start with an overview of the responses that we had to the exposure draft, we had 38 responses from a wide range of geographical regions. 5 of the responses, you can see the breakdown there. 5 of the respondents were from regulator and audit oversight bodies, and 2 of those were from monitoring group members, which was IOSCO and IFIAR. Unfortunately, there weren't any responses from preparers, those charged with governance, or investor and investor representatives, other than the overarching response from IOSCO. Next slide, please. In terms of what we heard, the first piece was around using the auditor's report as a mechanism for achieving the transparency that IASB has introduced. And you can see from the slide there was very strong support from respondents for the auditor's report as a mechanism to achieve this. People noted that it was preferable to the other mechanisms that are under the control or under the influence of the IAASB, and that it was optimal in terms of the timeliness, accessibility, and consistency for users of the transparency that is being introduced. Other feedback in relation to the use of the audit report was a number of commentators highlighting the importance of flexibility for jurisdictions who have other means to provide the disclosure. So that was something we felt was reflected in the conditional approach that was in the exposure draft, was allowing alternative mechanisms if they were in existence and perhaps covered by legal requirements and so on. And there was also an element about in some circumstances the auditor's report may have limited distribution, and questions about how that may be addressed. And this point on the feedback we have already shared with IASB as they look at topics for further consideration. Next slide, please. So in terms of feedback that we had on the actual proposed revisions that we had included as part of this narrow scope project, for ISO 700 revised, there was broad support from respondents for the conditional requirement, although it is worth highlighting that the 2 monitoring group members, as well as another regulator, had a preference for an unconditional requirement. And then in terms of other points that arose, there were comments around the use of the word differential in the requirements. It's a phrase where people commented it's not in regular use and may be difficult to translate. And there were also suggestions and requests around the basis of opinion illustrations and the application materials with suggestions or requests for more examples. And then in relation to ISA 260 revised and the feedback we had there, again, there was support from the respondents for the approach that we had taken by addressing in the application material. But the two monitoring group members, as well as two others, preferred an explicit requirement rather than addressing an application material. The other key point that respondents noted, which was the inconsistency in the requirement of paragraph 16, which applies to listed entities, with the application material, which refers to PIEs. And the respondents suggested there that IAASB should further consider that as part of track 2 when looking at the approach for adopting the IASB definitions for public traded entity and PIE. As part of track 2, possibly preempting one of the later points, the PIE task force has already discussed with the IAASB the principle of splitting the requirement in paragraph 17 of ISA 260 into two parts, which would address, so one part would be applicable for all audits and the other part would be for listed public interest entities. And that would address the comments around the existing inconsistency that there is, as well as the monitoring group respondents' preference for the explicit requirement. So I appreciate I'm possibly getting a little ahead of myself, but it is something that we have already discussed with the IAASB. Next slide, please. Another area where we asked questions about in the exposure draft was in relation to reviewing engagements. And the purpose of putting the question in the exposure draft around whether a revision to ISRE 2400 should be pursued was undertaken to inform the IAASB about whether further action should be taken in track 2 of the project. So it wasn't anticipating that it would be dealt with in track 1, but it was informing our work on track 2. Important to highlight that the project proposal scoped out any further actions in relation to ISRE 2410, so the interim review standard, because that standard is still in a pre-clarity format and a holistic revision is already being considered as part of the IAASB strategy and work plan for 2023-27. So this consideration is really in relation to review engagements, not the interim reviews. And there were mixed views here, as you can see on the slide, as to whether ISRE 2400 should be revised to address transparency. And the views on the one side were the transparency requirement in the IASB code applies to both audits and reviews, so a revision is necessary to achieve compliance and consistency with the IASB code. On the other hand, there was a broad recognition that a review of historical financial statements in practice is very rare because PIEs are usually subject to audit. So, as I say, mixed views there, but as we've noted on the slide, the conclusion or the feedback was that if a revision is undertaken, then there was broad support for undertaking that in a consistent way. So the conditional requirement that is proposed for ISA 700. Next slide, please. This is continuing on the theme of the review engagements because as part of their deliberations, the IASB didn't specifically discuss the application of the transparency requirements in paragraphs R420 and 21 of the IASB code for review engagements in their original deliberations. So their discussions on transparency were really focused on audit engagements. So the IAASB staff scheduled a special session in February 2023 to consider the review engagement piece specifically, and that was observed by myself and Vinny and Kalina, who are with you. And the outcome of that discussion, as presented on the slide, is that the IAASB supported their PI rollout working group proposal, which was to maintain the scope of the transparency requirements in paragraph R420 of the IAASB code to be applicable to both audits and review engagements. So that was a clear steer there. Recognising some of the potential challenges, they did also agree to consider updating the staff prepared question and answer document to clarify how that could be dealt with, for example, when performing an interim review engagement under ISRE 2410. I won't go into the detail, but it would help clarify when transparency has already been achieved, for example, through the audit report. So the IAASB is going to look at that. Clearly, they will be careful to make sure that any guidance isn't about interpreting or introducing new requirements or introducing an exception. But I think that would be helpful in practice, and we will work with them potentially on that. Next slide, please. So I've summarised the various highlights of the feedback that we've had. I appreciate that there's more detail in the papers that you have. And what we have here are probably the highlights of the PI task force's recommendations and initial views on the way forward. So I think firstly, the auditor's report is a clear mechanism to be used to operationalise the IAASB's transparency requirement. That was supported through the ED, and we will continue to progress on that basis. I'll come back to the discussion on the conditional requirement, but we have concluded and we are recommending that the conditional requirement in ISO 700 revised is an appropriately proportionate response for a global standard to address the transparency point. And then as part of track 2 of the project, we are recommending that we address the requirement in paragraph 17 of ISO 260 revised to include an explicit requirement for communication with those charged with governance about the independence requirements applied for certain entities. And we will also, as part of track 2, look at revising ISRE 2400 to address transparency for reviews of historical financial statements. On the conditional requirement, as you will appreciate, given the feedback, we spent an awful lot of time working through the advantages, disadvantages of the different approaches. But we felt there was a lot of feedback about the need for jurisdictional flexibility, and there were also cautions in some of the feedback about the unintended consequences of operationalising the transparency requirements of the IAASB code through the auditor's report, for example, where there were multiple ethical codes, or imposing an obligation even if the relevant ethical codes didn't require disclosure. So there was a lot of mixed feedback, and so we deliberated very hard, and we concluded that was the we felt that was the appropriate proportional response. So those proposals will be put to the IAASB for discussion in March. Obviously, we very much welcome your feedback. In terms of the next steps for track 1, because this is a narrow scope amendment, and we're building on the feedback and responses to the ED, I think we would anticipate this being probably our last touch point with you before the IAASB approval in June 2023. So obviously appreciate the feedback now. Jim, I think it's probably over to you. The next slide has the questions that we've looked for. Really looking for feedback on the views and the recommendations in relation to track 1, and also if there's anything else that you think the PI task force should consider as we finalise the final pronouncement for approval by the IAASB in June. So Jim, back to you. Thank you.
Thank you, Sue. And I know we've had considerable conversations on this. I do want to highlight to the CAG, this is our last chance to provide feedback. So if you have any, please be sure to share it. And so we're going to give everyone a second, Sue, to collect their thoughts to see if we have any questions, comments. Akihito.
Thank you, James. Thank you very much, Sue, for your presentation. I can understand clearly. I have 2 points. Firstly, regarding the revision to ISA 700, as Sue introduced and as mentioned in our IASCO's comment letter, for track 1's exposure draft, our preference is unconditional approach for more transparent. Even when costs and benefits are considered, the benefits seem to outweigh the costs. In terms of auditors' credibility and public interest, I prefer unconditional approach. The second point is the process for issuing the revised final standards. Considering that period is not long enough to the effective date, maybe flexibility approach, including sharing the details to a wide range of stakeholders, especially audit firms, in advance, and communication with PIOB for earlier approval could be considered, I think. That's all. Thank you.
Thank you. Anyone else? Bello.
Thank you very much. Just a quick, simple question that I would like to have clarification, maybe perhaps from the task force. Well, I mean, I think it was a wonderful job done by the task force, and it's a great material. The 2 exposure drafts, I mean, were very, very comprehensive. But I just wanted to ask regarding the response rate. Do you consider the response rate adequate? So I think this is just the question that, considering that this is going to be finalized and you have only 38 responses for a global standard. So do you consider that as adequate or enough?
Thank you, Bello. Hey, Greg, I was going to go to you. I know there was some public sector considerations here. I know you didn't raise your hand, but I'm going to come back to see if you have any points. Klaus?
Yes, thank you. Just to be brief, in line with what I said before, I agree that the auditor's report is a clear mechanism for this place, so I support that, and I also support what the task force comes up with here, saying that should be a conditional requirement. So I support that.
Thank you, Klaus. Wei?
Thanks, James. Thank you. Hello, everyone. It's just a quick comment. Thanks for the update and overview of the comments received from the track 1 exposure draft. Transparency is important to ensure users of auditors report to fully understand the set of ethic code which is complied by the auditors in the public interest entity audits. So I look forward to IAASB approving the final standards after considering the comments received. That's all. Thank you.
Thank you, Wei. Galen?
Thank you. I'd just like to weigh in very briefly. So I also, like others have spoken, support an explicit, unconditional approach, both to audits and reviews. And I also believe that in Section 260, there should be a comprehensive discussion to inform the audit committee of the decision. Thank you.
I think you're getting some support here, Sue. So I will continue on. And we have Hilda.
Thank you, Jim. Hi, Sue. Thank you for your presentation. And congratulations on the progress that you have made. We're happy with the proposals that you have made. And, you know, because there is this reference to conditional, not conditional. So we think that for now, the conditional requirement makes sense as you have proposed it, both for ISAE 7000, and that's also what we expect you plan to do for the ISAE 2400 on the reviews. So we're happy with that. Thank you very much.
Thank you, Hilda. Conchita.
Thank you. We have been discussing this matter, and the presentation today, I find them good, and I support it. Thank you.
Thank you, Conchita. Let's see, I thought I saw our hand. Daniel?
Good morning, everybody. It's a very important project, this one. This issue generates controversy, particularly in developing countries, such as Latin American countries. The application of the ISAs must be in line with the IFRS, and the size and economic impact of large companies has been taken as a reference in different countries of the region to establish the obligation to apply IFRS, as is the case with Brazil and Colombia, to mention just two. For us, it would be important to specify the definition of PI a little more, because if we only think of the financial sector and the stock market, only very few companies would be subject to the requirements of the PI audit, taking into consideration that other large and important companies could have a very high influence for the country, for the countries as a whole. That's my concern. Thank you.
Thank you, Daniel. Mike.
Thanks. I thought the presentation was great. You know, being new to this group, this is the first time I had seen that. However, the concept of PI is not unfamiliar to me, because it probably goes back to my first NASBA meeting 12 years ago when we were talking about this. But I fully support where the task force is for both audits and reviews. Thank you.
Thank you, Mike. Anyone else? Dave?
Thanks, Jim, and thanks, Sue, for the presentation. While I believe an unconditional requirement would achieve or could achieve greater consistency, I certainly understand the arguments supporting the conditional disclosure as a way forward at this point in time.
Thank you, Dave. Sue, I think that's all the comments we have on this particular topic. Oh, did I miss someone?
Yeah, great.
Well, I was waiting for you to put your tent up. I wasn't going to put you on the spot. Greg?
Thank you. I didn't have a concern with what was being proposed, but since you asked, Jim, just to be on record, I did believe that what was proposed was workable for the public sector, so I didn't have a concern with the final proposal.
Thank you. I think we appreciate the public sector perspective on that. Sue, now I think we've exhausted all tents.
Thank you. I'll try and I'll try and respond back. I have to say it's a little bit difficult for me to catch everybody's name in the room. So if I call you by the wrong name, I apologise in advance. I think what the feedback has done has sort of illustrate the slightly I suppose the balance of the feedback we had on the exposure draft around the conditional and unconditional position, and it was the final comment I thought was very helpful around, you know, it works for the public sector and this has got to work for everybody. So Akihito, I completely understand what you say. I'm sure it's something that will be the focus of the IAASB discussion as well. So we have looked at it very long and hard, and I'm sure we will continue to do so. And we have explained the rationale for why we've got to where we've got to in terms of the recommendation. In terms of your suggestion for the process for the standard and the period to the effective date, I think that's a very helpful point. One of the points I would make is when we've been looking at this track one, the extent of the change is relatively small. So our expectation is that this isn't something that is going to require enormous changes in methodologies and what have you. So the expectation is that the effective date should be capable of being met. It's not something we've had feedback back on, particularly through the exposure draft or other consultations. But I do very much take the point that getting information out early is important to support that and to support the effective implementation. So although we haven't formally had the discussion, I think around some of these things, it's a very good suggestion. So thank you very much. Bello, you asked a question about the response rate, and I think it probably would make sense for me to perhaps reference to Villy in the room. I mean, again, clearly this is a fairly narrow scope amendment, but perhaps Villy, if you're happy, would you mind saying a few words about the sort of expected response rate and things that we have? I can't see Villy, so that's oh good. Now I can.
Here we go. Thank you. Yeah, sure, Sue. That's fine. I think Sue has already touched on one of the items. I think Bello, your questions in the context we received 38 comment letters. So yes, if we look at feedback that we normally receive to exposures, 38 is on the lower side. But again, I think we need to remember that this is a narrow scope project. It was only revisions to ISO 700 and 260. And remember, it was primarily to operationalize the requirement in the ethics code. So we're also coming off the back of ethics that went through full due process. So I think this has already been sort of in the market for a while. So taking all of that into account, we were fairly happy with the responses that we got.
The only other point there is, again, this is the risk of counting comment letters. Many of the comment letters embody a wide range of organizations as part of their comment process. So if you're in an international organization like IASCO, for them to reach a comment letter, it embodies all of the securities commissions that are members of the relevant committee of IASCO. Same for many of the other groups on this list. So I do feel like it's an adequate response, broadly reflective of stakeholders as well, but it is also a pretty narrow scope amendment too that we're pulling off here.
Sorry, could it be the consultation period?
No, I don't think so, because again, remember what our consultation period is normally 120 days, but we have flexibility to either make it longer or shorter. And I think, again, because of the narrow scope nature of the amendments, we thought 90 days were fine. Also, again, because the ethics project already had gone through their process and their exposure period was also just 90 days.
Sue, I'm looking around. I do not see any Oh, I do see one more.
Yeah.
Kachita.
Just to support the discussion on the results of the feedback. I believe I agree with what was said, that it was a short period, it's a narrow scope, not to mention that the respondents represent really groups. So if you just count the reply letters, they may seem to be few, but the representation is wide per reply. So I believe that's fine, and it's sufficient to back up whatever has been presented to us. Thank you.
Thank you, Kachita. Sue, I will give it back to you.
Yeah, I think there was just one more I think I'd noted down to perhaps respond to, which was Daniel. You were talking about the value in expanding more the definition or providing more examples and so on. And I just wanted to say that's something that will be covered in track 2, and we have already been taking a look at that. So Jim, I think that's the sort of feedback on the comments we've had. I just want to check in with you that there was nothing that you wanted us to pick up in relation to question 2. I'm assuming people answered both questions 1 and 2. I'm happy to move on if you are, but I just want to check in that there's nothing else you'd like us to cover on this one, because obviously this is.
Let me just confirm with the.
Yeah.
Let me just confirm with the CAG. Any perspectives? I assume the responses were for both 1 and 2. Okay, Sue, I think we're fine.
Right, sorry, I was having trouble with my mouse. Okay, that's good. So if I'll move on then to track 2, if we can go on to the next slide, lovely, thank you. So as I mentioned at the beginning, for track 2, we already discussed a number of topics with the IAASB in December. We've outlined on the slide here. We talked through things like the objective and guidelines for establishing differential requirements for certain entities in the IAASB standards. We looked at a case-by-case analysis of the existing differential requirements for listed entities that are included in the ISAs and the ISQMs. This area in particular, this took a fair amount of additional further research. So we looked at previous IAASB consultations and deliberations and decisions at the time to understand what the rationale was for going for listed as opposed to anything else, and what the implications were, or whether there was support for the differential requirements. We also had an outreach session with the Forum of Firms in November, where we were talking about some of the practical implications in relation to the case-by-case analysis as well. We looked at factors and examples in evaluating the extent of public interest in an entity, and perhaps, Daniel, that's something that that plays to the comment that you made around some of the different entities that can be brought into that area. We looked at adopting the IAASB definition of public interest entity and publicly traded entity. And we looked at aligning the introductory material and application material in the ISQMs and ISAs, and we had some example wording there. So next slide, please. This slide shows you the requirements that were subject to the case-by-case analysis that we did. So these are the differential requirements that apply at the moment to listed entities in the ISQMs and the ISAs. And we looked at proposals for each of this and considerations about what the impact might be if these requirements were extended from listed to PIEs. A couple that it's probably worth highlighting, which were the ones that probably attracted more comment in the board discussion, were engagement quality reviews in ISQM 1. That's a relatively new standard. And also the discussion around communicating key audit matters as required by ISA 701. Those are the ones that I think probably took more of the time and debate. But as you can see, it's not actually an extensive list, and so these are the areas that we talked through with the IAASB. Next slide, please. And then this slide summarises the feedback that we got from the IAASB, which of course will then inform the work that we do going forward for the track 2. So the IAASB supported adopting in the authority of ISQM 1 and ISA 200 an objective for establishing differential requirements for public interest entities based on the IASB code. And they also supported adopting the IASB definition of public interest entity and publicly traded entity. The board was also supportive of extending the differential requirements in the ISQMs and the ISAs that are currently there for listed entities to apply to PIEs based on the case-by-case analysis we did, with the exception of ISA 720 revised. And that's to do with transparency of other information. And the reason for excluding that is that ISA 720 has already been identified as a potential project in the strategy and work plan for 2024 to 27, because there are a number of implementation issues with that standard that have come up as part of the auditor reporting post-implementation review. So the intention is that ISA 720 will be addressed separately, but there was support for extending in the other standards. Having said that, notwithstanding support on extending in those other standards, the board did ask us to more specifically consider the implications of revising ISQM 1 at this time, particularly related to the applicability of engagement quality reviews, given that ISQM 1 is a relatively recently effective, and I'm sure we're all very aware of that. And they also asked us to include a specific question in the explanatory memorandum at the time of the issue of the exposure draft on whether the differential requirements for communicating key audit matters for listed entities should be extended to apply for PIEs. I'm sure some of us will remember that discussion took place at the time ISA 701 came in, and it's something to consider out as we go forward. So those are the areas we've already taken a look at in relation to track 2. And I also highlighted the discussion we've already had in relation to ISA 260 as well, about splitting the requirement in paragraph 17. So that's sort of where we've got to on track 2. I think, Jim, the next slide is the questions for the CAG, please, which is really asking for your views on the scope 2 of this project, and particularly around amending the existing differential requirements that apply to listed companies, amending those to apply to PIEs, and any potential implications or considerations in replacing the definition of listed entity with the definition of publicly traded entity, which is used in the IASB material. So, Jim, I'll hand back to you.
Thank you, Sue. I'm going to give everyone a second just to read the slide, since it has several words on it there. So looking for support for question number 3 or otherwise, Hilda?
Thank you, Jim. Overall, we're supportive of this approach. Just one question. We presume, but that might not be the case in many jurisdictions, like it is the case in Europe. There are legally determined definitions for listed entities. There are legally determined definitions for public interest entities that somehow there will be recognition that in circumstances might take precedence to what would be determined here. For all of those entities, we actually have already, we think, most of the requirements, not just for listed entities, but for public interest entities, as we have them defined in laws and regulations. So we think broadly it will come to the same, but somehow we think that our legal definition would take precedence over the one that you would have in the standards. But maybe Sue can clarify that.
Thank you, Hilda. Akihito.
Thank you, James. Thank you very much, Sue, for your explanation. I support the case-by-case analysis approach. I have 2 comments regarding track 2. The first point is about the scope of these extensions. It is crucial to consider stakeholders' need carefully. For example, regarding CAM, key audit matter, it should be properly recognized whether the users are requiring CAM for the audits of the whole pies or for the audits of some part of pies. For example, audits of financial institutions. Following the result of outreach, depending on the situation, mandatory requirement of some differential requirements could be limited to a part of audits of pies. And you could allow each jurisdiction's flexibility, I think. It's the same approach as IAASB that could cause auditors to act in response to public interest. The second point is the timing, which may be showed in the next slide. The revision of PI definition by IAASB will be implemented from December 2024. Until then, each jurisdiction will consider and decide its definition of PI. It could be more useful to request to respond to exposure draft of track 2 after the definitions of pies for each jurisdiction have been determined. From that perspective, the timing of approval of this exposure draft could be determined, I think. That's all. Thank you.
Thank you, Akihito. Conchita.
Thank you. I support the items listed. Just a qualification on the definition of listed entity to be replaced with publicly traded entity. I suppose there's a need to clarify because in my jurisdiction's particular case, both may be listed, but the one definition is you have listed entities, but the entity is dormant in terms of trading, but it is still listed. So does it mean that it will not be covered because it is not publicly traded, meaning over a certain period of time, it's not traded, meaning very slow movement in the market. I just want to submit that particular case. It may be more an exception, but some clarifications, that's all. Thank you.
Thank you. And before I go to Wei, for those in the room here, I want to do a scan for your support or otherwise, so we can send Sue off with a good sense on this particular question. In the meantime, Wei, you're on.
Oh, okay. Thanks, James. On track 2, I support task force direction in ISQM1 and ISQM2 in the quality management standards and requiring engagement quality reviews of PI audits. Also, I am supportive the direction in dealing with PI in ISO 700 in naming the engagement partner, and 701 relates to K audit matters. That's all. Thank you.
Thank you, Wei. Jasmine.
Thank you for the presentation, very thoughtful materials. We did want to express support for the amendment of the differential requirements that are currently applied in both terms of the ISQMs and ISAs. Thank you.
Thank you, Jasmine. Klaus?
Thank you very much. And I also support the proposals here in question 3 to apply the differential requirements. The current apply to listed entities also apply to PIs, and also that we're replacing the definition of listed entity with a publicly traded entity. Yes.
Thank you. Galen?
Thank you. So on both of these, both A and B, I'm supportive of both. I don't think there's an inference that we're trying to extend the CAMs to reviews, right? Only audits. Then, you know, we were chatting a little while about it when we were talking about LCEs, but FTX, for example, is not a listed entity, and they were audited, but maybe they would qualify as a PI, and therefore I think that might be, you know, what is going to slip through the cracks, and that's one that might be caught up with a more stringent approach. So that's why I'm supportive.
Thank you, Galen. And Hyson?
Also, thank you, Sue. Thank you. I also support the work made by the task force on public interest entities and the proposal on the track 2 to narrow the scope of the project on listed entity and PIs. Also for differentiating the requirements, and also for the replacing the definition of listed entity with publicly traded entity. So this will help also to be very useful when it comes to ISQM standards. Thank you.
Thank you, Hyson. Daniel.
Thank you. I think I'm in the line with Galen. I think one thing. First of all, I agree with the B point. I think it's right to change the term. But about A point, one thing I think is the requirement to apply the complete ISAs to companies that are considered PIs, taking into account what I already commented on the definition of PI. And another is the CAM, which certainly are important depending on the resources of the public that have the company. So I think it's very good for large companies with special conditions to be subjected to the application of full ISAs, excuse me. But I'm not sure about the CAM. because of the CAM is useful when we have companies that have a lot of resources from the public eyes. So I would think it would be good to revise this point. Thank you.
Thank you, Daniel. Mike.
Jim, I am supportive of both A and B for question 3.
Thank you. Greg?
Thank you, Jim. Just also to indicate support for questions A and B. And something I haven't heard is that I think it's important that the two sources of guidance in this area, so the ethics code as well as the assurance standards, remain in alignment, because it only supports our understanding and application. So I think it's important that we stay in sync, which has been done throughout this project.
And I agree with you on that comment. We're seeing a lot of support, Sue. I think this is good. Good news for you. Dave?
One more in support. Just want to say that I believe, based on the way you've described this, the scope for track 2 is, it will definitely be in the public interest, and we look forward to the work that you have ahead of you.
I think we've exhausted all comments, and I will send it back to you, Sue, for the way forward.
Thank you.
Our responses.
Yeah, sorry, I'll just respond to a couple of the points that were raised. So first of all, thank you all for the support. It's very helpful and will inform our work going forward. I think just working through the comments, Hilda, you asked a question about the legal definition of pies. I think what we are proposing is using the IAASB definition of pies, and we recognise the role of the law and regulation at the jurisdictional level there. So I think and I hope that will address the point. I mean, I think you asked whether we'll broadly come to the same answer without any kind of commitment in an area like Europe. I think that the local laws are aligned or potentially more stringent. I think obviously it's something that needs to be done on a case-by-case basis to see where you end up as to whether there would be add-ons, but certainly we do recognise the importance of the local legislation. Akihito, thank you for your suggestions, because I think the point you made about key audit matters was actually possibly coming from a slightly different place to what Daniel said, but I think they probably both come with the same suggestion, really, which is about exploring which pies the CAM are being used for, and perhaps which it's less helpful for. So that, I think, will inform any questions that we're writing when we're looking at the exposure draft, because we do want to understand the implications of CAMs. And you also asked about the timeline. Obviously, we'll come back to that when we talk about the timing. But I think you were talking about responding after the definition of pies has been done locally. I think given the timescale we have, that's something that is in train at the moment in any event. But I can't see Billy in the room, but Billy, I don't know whether you had any comments in relation to the specific timeline here around the exposure draft. Obviously, we're trying to juggle getting people's feedback and practical implications. I think people are already thinking about the implications of the IAASB code, even if they haven't got there. But can I just ask if Billy has any points to add?
Yeah, thank you, Sue. And I think, Sue, you've already touched on the point that we're already in the situation where for us to undertake this project, we had to wait for IAASB to finish their project. And the ethics code is going to become effective for December 2024. And that is why we particularly also bifurcated this project into the two tracks, because the most critical one was to provide a mechanism to operationalize the disclosure requirement about which independence requirements were applied. And that's why we fast-tracked track 1, so that can become effective in December 2024. But yes, inevitably, there will be a gap between us adopting the definitions of PI and publicly traded entity into our standards, as well as extending the extant differential requirements from listed entities to PIs. That could be a gap of 1 year or 2 years, depending on the project timeline. But that for us is not the biggest concern, but because that's a pre-existing difference between the code and the standards. So that's something we can then always just correct once we completed track 2. But to Sue's point as well, at least the benefit would be that the market has already adjusted to implement the ethics code. Thank you, Sue.
Thanks, Billy. Just running through a couple of other comments. Conchita, you were asking about a listed company that is dormant, and we do see those in certain jurisdictions. My understanding is that doesn't meet the definition of publicly traded entity that's now in the IAASB code. So those entities will come out, I think. Galen, you asked the question about CAMs not being required for reviews, and I just wanted to confirm that that's the case. CAMs are not anticipated for reviews. And Greg, I just wanted to say thank you for the appreciation and recognition that we are. I think both boards are working very hard to try and make sure that as far as possible, while we're all going through appropriate due process and so on, the ethics and audit standards are staying in sync. And certainly I'd like to express my thanks for the support we've had from the IAASB team as well. Jim, I think that's it in terms of the responses I have, unless there's anything else or any follow-up questions.
I think that's all we have here, and I think that leaves you with the way forward.
That's great. So this is hopefully fairly straightforward in terms of the way forward. So just summarising on where we are and the ongoing piece. Obviously, above the top there, you can see the ongoing coordination and collaboration with IAASB we anticipate will continue all the way through this process. The expectation is that track 1 will be approved by the IAASB in June 2023, and as Billy says, to allow us to align with the IAASB implementation date. And then for track 2, the detailed work on track 2 will continue in the first quarter of 2024. The ED will be presented to the IAASB. The expectation is that will happen in June 2024, with the expected approval of the final pronouncement in June 2025. So Jim, I think that's it in terms of observations and feedback on this project.
Thank you, Sue. I'll just open it up one more time. Any final thoughts before we let Sue go? Sue, thank you so much for your presentation. Thank you to the members of your task force and staff. We greatly appreciate you've kept us in a loop on this one from day one over the course of a number of people on the task force, but certainly we appreciate it. And with that, I think we'll move to our next topic here in a minute. Billy, are you ready for a little bit of audit evidence? Now, you do realize you're standing between us and lunch, but there's no pressure.
Now we should get to lunch in plenty of time. All right, so this is agenda item I on the agenda for today. These two agenda items, I1 and I2. So this is really just because these projects are not ongoing. This is really just to report back from the September discussion that we had on these topics with the CAG. The first one is on the audit evidence project. And as you know, that after we received the CAG's input in September 2022, after that, we proceeded to, at the IAASB meeting in September 2022, to approve the exposure draft for proposed ISA 500 revised, which was issued in October, and the comment period is closing now in April, I think April 24, if I'm right. So we expect the next board meeting where we will discuss this topic with the IAASB would be at the December meeting this year, after we've analyzed the comments. And on pages 2 to 6 of the agenda item, we've provided a report back from the September meeting. There's nothing specific I want to highlight in the report back, maybe just a few overall observations, because I think, you know, when we spend time to also write up this report back to the CAG, and obviously we've been hearing a few things in the market as well while the exposure draft has been in the market. I thought it would be good because I think some of the items raised in the CAG as well reflects on some of these overall observations. The first one is, I think it is important that everybody just remember that ISA 500 revised, or proposed ISA 500 revised, cannot be viewed in isolation. It is a standard that has deep connections to the other standards like ISA 315, ISA 330, and ISA 240. ISA 500 fulfills a very specific role in the suite of standards in that it provides the auditor with a reference framework throughout when making judgments about audit evidence. The way to think about that is, yes, there's just a handful of requirements in that standard, but those requirements apply every single time you have to deal with information intended to be used as audit evidence. So every time the auditor plans and performs risk assessment procedures, plans and performs further procedures, has to perform specific procedures that are included in the other ISAs, you have to comply with those requirements in terms of information intended to be used as audit evidence and evaluating the audit evidence obtained. And then I think other comments that we often get is that there's clearly a need that some of the other standards in the 500 series that also deals with audit evidence also needs to be looked at, and especially from a technology point of view. Now that is fully recognized, and that's also why in our strategy and work plan consultation, we have specifically drawn that out, that there's probably a handful of standards in the 500 series that are candidate topics for next projects, and very much with the lens of what the impact of technology is in terms of both the entity's use of technology and the auditor's use of technology. So I think with Jim, with that, we can just open to representatives if there's any comments on the report back.
Thank you for that. Any comments on Billy's report back? Billy, I don't see any. Did you have anything else? What's that? Yes, I thought so. So you want to talk about the work plan?
Yes, so that's the second report back that you received in agenda item I2. So again, we received the CAG's input at the September meeting. We proceeded to approve the strategy and work plan at our December meeting, the consultation for the strategy and work plan at our December meeting. So that is out in the market at the moment. That consultation closes on April 11. And then we will obviously start analyzing the comments. And here our timeline is aligned with that of the ethics board as well. So we aim to approve the strategy and work plan at the December meeting. I think what's also important to note from a CAG perspective is that for the September CAG meeting, we will have a joint session between IAASB and IAASB, as well as at the board meeting, we will have a joint session to discuss the strategies and work plans of both the boards. Like I said, the approval is then for December 2023. Again, the report back is provided on pages 2 to 3 of agenda item I2. I think the major thing that I maybe just have to point out, after the September 2022 meeting, when we went through the discussions at the board level, the board did ask the planning committee, who is acting as the task force for the strategy and work plan, to make sure that we don't just provide a list of candidate topics for new projects, but that we give an indication to stakeholders of what the board's views are in terms of the relative priority of those candidate topics. And those of you that have had a look at the consultation paper would have seen that in the consultation paper, in the text just before the table of possible next topics, we did provide an indication that in terms of audits and reviews of financial statements, we probably anticipate that the next big project will be on ISA 330, following ISA 315, and then possibly a project that addresses the other standards in the ISA 500 series with that view of technology. So those are the ones that we think will probably come out as the top ones, but obviously subject to what we actually hear, and subject to the fact that things could change. The priorities can change because of changes in the environment. And then you would have picked up that we've separated throughout the work plan that there's the two streams. There's the focus on audits and reviews of financial statements, which will always be one of our core focuses. And then obviously the focus on assurance services, and then at the moment, very particularly the sustainability assurance stream. So that, Jim, I think that's all I wanted to say on that one. But again, happy if there's any feedback on that report back.
Report back number 2. Any feedback from Paul?
We at IFA have had a glance through the paper, and we really like what we see. I think, you know, speaking with a small and medium-sized practice head-on, or SME head-on, I guess inevitably the question arises with any sort of consultation, what special efforts might be made to elicit input from a constituency that traditionally doesn't respond very much, and there's not actually many representatives of that constituency like ourselves that can respond on their behalf. I know the professional bodies do to some extent, national standard setters do, but yeah, I just feel that the SMPs and the investor community as well, that traditionally we're perhaps not hearing as much as we'd like from these constituencies. So I just wonder whether there are any particular outreach plans that might mitigate that lack of response.
Yeah, thank you, Paul. And yeah, that's true. There are certain constituencies that we normally struggle to hear from. So what we have done is we've tried to, since the exposure draft has been issued, we've tried to the consultation paper has been issued. We have really been highlighting the strategy and work plan in terms of our general outreach program, also in our coordination with IFAC, especially, for example, the S&P AG, and then also just through our normal social media channels and those type of things, we've tried to push that, yes. But yes, we've obviously not, we haven't done webinars and things like that, but we've tried to use the channels that are available.
All right, any other comments? John?
Just quickly, IAASB did finalize its audit evidence letter yesterday, so that's there already, and we're of course working on the strategy work plan feedback. So thank you for the report back.
And Jim, I can just confirm, received. maybe just on that point, a point of clarification is that we tend to only post the comment letters once the comment deadline is reached. So once the comment deadline is passed, then we post all the comment letters on the website.
Christian, you had your hand up, then down. I'm not sure if you want to comment or not. You're on mute, Christian.
Yes, yes. I think we called for some topics on audit evidence, and our comment letter is currently being developed. So I think so far nothing to add here. That's why I pulled back my comment. Nothing in addition.
Thank you. Billy, one other matter, and that was at the IAASB meeting, there was a little bit of an informal update on the process for related to the CAG transition. I don't know. Do you have just a few comments you might make on that?
Yes, Jim, happy to. As CAG knows, we had that session with CAG last year in October, I think, at the beginning of October, where we set out the transition plan or the steps that will have to be taken in terms of transitioning from CAG to the new Stakeholder Advisory Council. The plan is still that the Stakeholder Advisory Council will be launched in January 2024. So this year would be the last year that we have the two CAGs as we know them currently. But there's also a process in place that we will have a call for nominations for the new members of the Stakeholder Advisory Council. Now that process is being run by the PIOB, Standard Setting Board's Nominations Committee. And the plan at the moment is that that call for nominations will probably go out around April, May. And then a final decision about the members will be taken around October, November. So obviously all the current CAG representative organizations would have the opportunity to again nominate members for the new Stakeholder Advisory Council. But that will be a public nomination process run by the PIOB SSB Nomination Committee. And then separately, leadership from the SSBs are discussing with the SSB Nomcom also about the identification of the inaugural chair or chairs for this Stakeholder Advisory Council. So that can be finalized well before we make the final decisions about the members, because we will have to start working with the new chair or chairs for the launch in January 2024.
And for the nominations, my understanding is it's more focused on the individual than the organization.
Yeah, correct. Yes, that's right.
Might I add to that? Also, it is probably okay for the representatives to understand that regardless of how many years you've spent on the CAG, there's a reset. So you will reset and then you'll qualify for whatever the new terms are in the new organization, should you have an interest in continuing with the new advisory committee.
Thanks, Galen. All right. Thank you, Billy. Appreciate the updates and the report backs. And I think we deserve some lunch. So we're going to take a break now and we will reconvene at 1 o'clock. I'm sorry, we're going to reconvene at 2 o'clock. It would be a fast lunch. Fast lunch. We'll reconvene at 2 o'clock. I'll see everyone then. Thanks.
I saw that. No, you said I've actually done it.
Danielle, can you hear me now? Okay. Okay, great. All right. Well, we're welcome. We'd like to welcome Danielle and Amy for a discussion on technology. And Danielle, I'm going to give it to you to kick it off. Is that correct?
I'm going to give it to Amy.
Oh, it's Amy. Oh, yes. Sorry, Amy. Amy,
yeah.
Welcome.
Thank you. Okay, so good afternoon, everyone, and thanks for having us here. I'm Amy Fairchild. I'm a principal with the IAASB. I'm also joined by Danielle, who's a staff fellow. She's joining us for an 18-month period. She's been really instrumental in moving forward our activities in this area, so we're really lucky to have her, but I'll let her give a bit more background on herself shortly. So what we're going to talk about today. So today we wanted to spend some time providing an update on the IAASB's activities in relation to technology and get some of your views on some topics relevant as outlined in agenda item J of your materials. I'll maybe also note at this point that our last presentation to the CAG, specifically related to our activities in technology, was in March 2020. So probably a memorable time in our lives for other reasons than the technology presentation to CAG. That was quite a while ago. So we can't cover everything today that we've been doing since then, but hopefully this will give a good overview and allow time to get your views and your feedback on what we've been doing and where we're going forward with this. So with that, I'll move us on to the next slide. Thanks. Okay, so this is outlined in the cover note, but I'll start off with a key reminder just on our approach to technology. And we really have two elements to our activities. So the first is the here and now. So it's involves exploring how we can most effectively respond to the growing use of technology through our existing work plan activities with new and revised international standards or through non-authoritative guidance. And I always like to think of this as how can we address technology using our usual kind of toolkit as a standard setter, so our more traditional activities. And secondly is keeping an eye on the horizon. So performing information gathering research activities to really better understand technology's effect on audit and assurance now and in the future, really to be prepared for possible disruptions, to be able to respond appropriately, to be able to support quality in this area. And our disruptive technologies element is really broken down into three parts, which we refer to build, maintain, and share. And I'll talk about them a little bit more on the next slide. If we can move on to the next slide, please. Thank you. So there's quite a lot going on in this slide, and what this visual is trying to do is really show how the work that is being done around technology links together. So starting on the left, some of the key inputs into the initiative. I'll start with the technology workstream plan, which commenced in 2019 and actually was the topic of the last CAG discussion in March 2020. And this was a plan that was developed in response to discussion paper and other outreach with and from feedback from other stakeholders on areas where non-authoritative guidance may be needed relating to technology. We've now actually completed the guidance in that plan. It resulted in the issuance of 6 pieces of non-authoritative guidance, which are linked to in your cover note. And these publications covered a variety of FAQs and topics, included examples, included diagrams, things to try and help auditors understand how to apply the ISAs in relation to different technology topics. So, for example, the last piece of non-authoritative guidance that we issued just last month actually covered addressing exceptions when using ATT, so automated tools and techniques, which is a topic that we often hear confusion regarding pretty often from stakeholders. So secondly, more specifically about disruption, we performed some initial research on disruptive technologies in audit and assurance. We partnered with an external expert to research and analyze the landscape of innovation activity in audit and assurance. And what the research did, and this was performed back in 2019 and into the start of 2020, what the research included was investigating over 100 technology innovator companies and interviewing over 20 organizations to identify technology innovation trends and to evaluate the potential effect on the audit in an assurance ecosystem. So this research was also supplemented with roundtables with attendees from various stakeholder groups. I know included some CAG members, and we resulted with a discussion with the board in January 2021. And this has formed the foundations for our continued work on disruptive technologies. And Danielle will cover this a little bit later because we have further updated this research, but it definitely shaped our kind of focus around building and maintaining and sharing focus, as can be seen on the slide. And another key input, we seconded Danielle, as I already mentioned, recognizing the need to carve out dedicated resource to this area. So we wanted to seek and find an expert who would be able to really take this area and move it forward. We are expecting to continue the secondee program relating to technology, so we can ensure that time continues to be dedicated to this area. So maybe I will do a plug that if anyone in your networks may be interested in such an opportunity, don't hesitate to reach out to ourselves or to Tom or Willie. So then let's look at the first cog on the slides, the build. And this refers to the building of processes and structures to support our technology initiative. In other words, we're really talking about setting the right foundations for a continued focus on better understanding the impact of technology. So some of the key activities in this area you can see on the slide include building a knowledge base and the establishment of a digital advisory group. So starting with a knowledge base, we've created a place to go, a base of knowledge for staff and the board, which provides information on innovations, technology trends. It's got articles, videos, company information, vendor information, and other useful resources to help with upskilling and to be used as a research resource for ongoing work plan projects. So the idea is really to upskill our staff and board in technology. There's just so much going on all the time. So trying to keep them up to date on what's really relevant content, what's happening in the area, and providing them somewhere to go, particularly given technology is, of course, relevant to all of our projects and activities. We also established a digital advisory group. These members have been carefully selected to provide broad and different perspectives to the IAASB. So the background of these individuals is quite varied. So we have a startup founder, a digital transformation expert, a C-suite representative. And what this group's really done is enabled us to gather insights that are different to those that we reach in our usual outreach process. So it helps us to kind of think a little bit more outside the box and challenge some of our traditional ways of thinking and kind of have a different perspective. And our plan is to have biannual meetings with this group. We've had 2 meetings so far, and we have a third planned for next month. We'll talk a little bit about the actions coming out of this group also in this presentation. So next, maintain. And this refers to building processes and structures to support the technology initiative, to setting the right foundation. So we've continued to perform research and outreach activities to build on our understanding of technology trends. We've had discussions with practitioners, technology companies, regulators. We've also maintained connections through regular touch points with our colleagues in IAASB, in lots of acronyms about to come up, but the IAAER, which is our International Association for Accounting, Education and Research, which is who we do some work with, and also our IFAC technology team. So for instance, we liaise with the IAASB team on their technology fact-finding report, which if you haven't reviewed yet, there's some really excellent information and helps them to shape their future technology related revisions to the code. We also continue to leverage our technology consultation group, and this is a group made up primarily of board members, to provide advice on technology enhancements and technology, kind of gives that technology lens to new and revised standards, as well as providing input in other areas of the technology initiative. Just a note, you might be used to hearing technology working group, which is what it previously was called. This has now been renamed to technology consultation group, just to reflect the primary role of the group going forward. So that input into other projects now that pre-planned deliverables from the workstream plan has been completed. And finally, share. So we continue to seek ways to engage the wider audit and assurance ecosystem regarding technology trends and what they mean to our profession. So that's through roundtables, presentations, and publications, coupled with the use of social media. So it's really to promote awareness and broaden the reach of our activities and contributions. One particularly popular successful initiative is we've been publishing regular market scan publications every couple of months. And each of these are focused on a different area of technology and provide a high-level overview of that technology in easy to understand way. Even I can understand it. You know, why is it important, as well as recent developments and what it means for the IAASB. So we've had some really good interest and readership with those publications. So a lot of different activities there, and this doesn't even cover everything we've done, but I think stepping back to think more broadly about what we're trying to achieve here, you know, on the right-hand side, you can see the key types of outputs from this work. So the so what from all of this. And so all of this work is really helping us to inform our future activities in this space. So whether it's identifying future standard setting activities, finding areas where maybe guidance or thought leadership needs to occur, and even changing the way we work as an organization as well. So it's a really kind of broad initiative, and it's touching us in a number of places. So I'm now going to hand back over to Danielle, who's going to talk a little bit more about some specific actions that have come out of the work in more detail. Thanks, Danielle.
Thanks, Amy. And if we could move on to the next slide, that would be great. So just to introduce myself to you all, as Amy said, I am an IAASB staff fellow. I'm on secondment until May, so I've only got a few more months to go, which I'm a bit sad about because it's been an incredible secondment experience. So my background is in audit and assurance most of my career as a practitioner, as well as data analytics leader and involved in digital audit enablement as well. So when the opportunity to do this comment came up, I jumped at it, and it's been a really, really great experience. So what I'm going to do is just elaborate on some of the areas that have come up through our digital advisory group discussions. So these are some focus areas really in addition to the ongoing technology activities that Amy talked about. And the first session we had with the digital advisory group, we had a sort of brainstorming session really about sort of various areas, including the role of the IAASB. And coming out of that, we had some really good outputs that we then used as the basis for some breakout group discussions with the board and technical advisors and staff back in September. And really the purpose of that was to identify actions to take forward in relation to these areas and really sort of determine prioritization and some practical things that we could do. They are very much a work in progress, but I'll give you some idea of some of the things that we're doing so you can see the sort of direction of travel. First and foremost is the technology and auditing standards, and this was really seen as the sort of highest priority. Now, this obviously might seem quite obvious as it sits in the heart really of what we do. But we've identified some practical steps that we can take to really detect opportunities for technology-related standard setting activities and ways that we can better really understand where gaps may exist when it comes to technology and where standards may be helping or hindering the adoption of technology. And one of the ways we're doing this is through a series of thought experiments. And I'm going to talk about these a little bit more in a minute. So just give you a bit more idea about those thought experiments. The second area is around encouraging the use of technology. And really this seeks to tackle ways that the IAASB can be more explicit about the value of technology in the audit. So rather than sort of staying technology neutral. So communicating how the use of technology can support the goal of effective high quality audits. And to this end, one of the things that we're doing is putting together an educational publication, which really articulates what we mean by the digital audit and describes considerations when performing a digital audit. As well as that, we're going to highlight in this publication useful resources, as well as, you know, established and emerging technologies that are relevant. It's not non-authoritative guidance, so it won't be like those publications that Amy talked about. It's really designed as just an educational resource to really help further the understanding of a digital audit. The focus area in relation to accessibility and consumption of auditing standard, this really relates to looking into options or understanding options around making standards more digital and more capable of integration into audit and assurance related technologies. And that might be through, for example, the use of APIs, so application programming interfaces. And it considers how standards and other publications are accessed and consumed by different stakeholders. And obviously that's evolving as a result of digital transformation. And on this, we're working very closely with our IFAC colleagues. The last one here is the age-old problem of data access. And really, it sort of recognises that, you know, this could be a barrier to adoption of technology. And the role for the IAASB here is really around as a convening power to raise awareness of the challenges around accessibility of data and the impact it has on digital audit transformation. So we're looking at ways this can be done, investigating things like data standards, so ISO 21378, but also, you know, thinking about what the problem is and how we articulate that problem. And one of the things we're drafting is a problem statement, which we can use to help have discussions. So I'll talk about the thought experiments a bit more now, if we can move on to the next slide. So as I mentioned, we're doing these to really, they're designed to better enable our understanding of the impact of different technologies and you know, how that impacts achieving the audit objective or audit objectives and on auditing standards. Now, the format of these experiments, and they're not, as I found out earlier today, having discussions with the IAAER, they're not the same as sort of academic experiments. They're really a sort of round table discussion. But we're using a series of scenarios related to the application of specific technology. And this is based on real world examples, so real world things that we're actually seeing. And the scenarios cover both technology that is entity deployed. So what we mean by that is obviously technology that's being implemented by an audited entity within their business model that's relevant from a financial statement audit perspective, and also auditor deployed technology. So where an auditor is using that technology to complete one or more audit objectives. And each of the thought experiments will focus on one scenario related to entity deployed technology and one related to auditor deployed technology. And we're bringing together small groups of individuals with different backgrounds, including non-auditors, to do this exercise and really sort of think outside the box. And so effectively they're putting aside you know, their views or their understanding of auditing standards and thinking, you know, trying to sort of think differently. So let me give you an example of one of the scenarios, and this is related to entity deployed technology. And this relates to the use of algorithms to account for revenue transactions. So in the scenario, we have a computer retailer, and they also do aftercare services. And they enter into contracts with customers to sell computer hardware, software licenses, maintenance contracts, tech support, all that kind of thing, or a combination of those goods and services. And the entity uses an application that employs developed algorithms to allocate revenue in accordance with the accounting standard requirements. So it gets inputs from the contract information and price information, and that comes from other systems. And then it performs calculations and basically books the appropriate postings in the general ledger accounts. And it automatically apportions revenue in the general ledger both for performance obligations that are recognised at the time, but also over time, obviously in line with accounting requirements. And during the thought experiment, what we'd seek to understand is ways that you might go about auditing the revenue of this entity. And we do that putting aside auditing standard requirements. So basically saying, you don't have to, if you had a blank piece of paper, there were no auditing standards, what would be the most effective way to gain evidence that revenue is free from material misstatement? And so the first part of the experiment is focusing on that. And then what we do when we come up with a sort of preferred approach, or a couple of preferred approaches, is we then think, how would we fit those back into the auditing standards framework? And is there any issue with doing that? Where might there be conflicts? Where might there be, potentially gaps? So hopefully we'll get some interesting insights from the experiments. We've actually got our first one running this Friday in London. So very much looking forward to seeing how that goes. And we've got a couple more also in diary as well. So watch this space. Okay, so that's a lot of information that Amy and I have thrown at you. So if we can move to the next slide. So at this point, we'd like to get some reflections from you. So I'll pass you back to Jim to ask for views on the technology initiative activities that we've presented.
Thank you. And so we'll go through the group here and see if anyone has any thoughts or comments. Jean, you're reaching for the tag, so I'll.
Sure, I have content when there is none. But thank you, Jim, and thank you, Amy and Danielle, for the presentation. As we all understand, technology is such a fascinating and fast-moving area, which presents a lot of challenges. But we are supportive of the board's proposed actions. Obviously, the identification for opportunities for related technology standard setting activity can be very challenging. But in terms of the identified IAASB proposed work plan related to the ISA 500 series to reflect the impact of technological advances sounds directionally like it's the right direction to us. Obviously, as technology continues to develop, it is very difficult to keep up with the rapid pace of change. So that presents a real complex challenge. I guess later in the presentation, we'll get into some of those specifics, but overall, we're very supportive.
Thank you, Jean, for kicking it off. Klaus?
I think that Paul was maybe 1 microsecond before me. So
I called you.
Okay.
I called you.
Okay, thanks. Generally speaking, I'm very supportive of this approach. I think it's important to have a holistic approach on an ever-moving topic here. So I commend you for this presentation, and I think you have done a great job. And in deciding also how to do this within the IAASB focus on this, because you never know what's around the corner regarding technology. Therefore, it's both building knowledge and understanding, and to be constantly. So this is probably a work stream that could be there forever, basically, because the idea to trying to finalize something here is not within. It's not possible. So I think you basically have tried to map up a holistic model that seems very workable. So I'm generally very supportive of this, and it's such an important topic.
Thank you, Klaus. Paul?
Yeah, I'm intrigued by these thought experiments. I think that's a really good idea. And I wonder, thinking in terms of crowdsourcing, whether there's maybe 2 ways you can expand the number of participants. One would be actually crowdsourcing ideas for future thought experiments that, others may have ideas that are worth putting through the thought experiment process. And then secondly, it wasn't clear to me exactly who would be involved in these thought experiments. Certainly you say it'll be, participants with different backgrounds, but you may be able to crowdsource people from out there who are interested in being involved and may provide diverse perspectives.
Thank you, Paul. Galen?
Thank you very much for the presentation. And, this is an interesting area, and I agree with the thought, the thought experiments that you're embarking on. I was just sort of wondering about outreach, recognizing limited resources at the board and what's available at the staff level and so forth. To what extent are we reaching out to the firms for feedback, or even some of the PAOs around the world? There's some major projects I know in my home country of the institute here that's ongoing. Hopefully we're taking advantage of those things so that we're not trying to do all of this by ourselves.
Thank you, Galen. Tom?
Thank you. I really appreciate the feedback. I wanted to also say, Danielle, you mentioned that it was your last meeting before this CAG, and so just to recognize Danielle's huge contribution for driving a lot of this vision forward for us, and Amy doing it. If you liked all the work on the LCE, this is Amy's side job to it. So they've done a tremendous job of driving this. And I think what Klaus said was the original vision was to have dedicated capacity. I've learned from corporate experience that if you don't dedicate resources for innovation thinking, it will get caught up in the day-to-day. And that's the precise vision for this. So it will probably forever be a work stream for us. The idea of the thought experiments too, I think I'm glad that it's get resonated in I think the idea of crowdsourcing is a good idea, but I got sort of tired with this idea that the standards themselves were not impediment for technology. And this idea that also that we need to be neutral. At some point, we can't be neutral always on technology. And so the thought experiments were a way to get more granular to see if we need to do something specific rather than leaving it more generic on technology. And so this is the real effort. So this is the first of probably many thought experiments. And innovation theory tells you to go small rather than go large. The problem is not so. So we will learn a lot from this, and we'll keep you posted on it. But I did want to give some general context of why we're doing what we're doing in addition to what you heard. Danielle, I'm sure you had some reactions too to what we got back, which was quite positive feedback. And I didn't think about the crowdsourcing idea, but it's an interesting one if we can find a platform.
Yeah, I agree. I think it's a really, really good idea.
And somewhat leveraging off what you just said, Tom, I was in a meeting a month or so ago with a technology company, and they wanted to show me, this is for a SOC report, where they had completely, in their mind, audited or provided assurance for the SOC report. And they said, the good thing is you don't really need auditors. And it was, none of them were in fact accountants or auditors or anything like that. And the point here is there might be a technology that comes up that we're not expecting, because oftentimes with the firms, it's incremental changes to assist in the audits, but it may be possible where there's something fundamental and where you just tell your computer, go audit IFAC, and off it goes. And so I think we need to think about that type of change as well. Billy?
Thank you, Jim. I thought I'll just come in on Galen's point about the outreach. So just to give you a little bit of background, what we've tried to do here to stay connected, as you've indicated, is that as we're undertaking these individual activities, we also reach out to stakeholders, which could be professional accountancy organization or national standard setters, etc. We've got the technology consultation group that comprises board members and TAs, and the idea is that within that consultation group, they also draw on their networks and stay up to date. We've had the 2 roundtables with the keen focus on sustainability this year. We will probably not be able to do a roundtable this year, but the idea is to continue the roundtables. And then what we will also do, and we've been doing it, I was trying to think now, but I think for the last 4 years, when we have our NSS meetings, we have a specific request for input from the NSS and say to them, please tell us specifically on technology, what is going on in your jurisdictions. And through that way, we get the input from the NSS as well.
Thank you for that perspective. Jasmine.
Thank you for this very helpful update. We are very supportive of the initiative, and also just wanted to highlight on the outreach efforts. A big topic of conversation for many large multinationals is actually building artificial intelligence into finance processes, including preparation of financial statements. And currently corporates are focused on processes and implications to controls and the rigor of the overall audit. So on the flip side, it's great work that the IAASB is doing, and they would offer themselves to connect to better understand how artificial intelligence is being incorporated, as that's evolving every week. There's new discussions as to changes and updates that facilitate the use of that.
Thank you. I haven't heard from anyone online. Anyone in the virtual world want to add a comment? Tara?
Thank you for the presentation. One of the things that keeps us up at night is on all these AI models, the introduction of bias. So it's probably a couple of steps down the road, but when we're talking about sustainability audits and some of the fairness and things, I think it's going to become a big field if it's not already on your list.
Thank you. Conchita?
Thank you. I support this initiative, and the faster we do it, the better. Thank you.
Thank you. Mike?
Great presentation. I can't even imagine. I think I heard you correctly. If I heard you correctly, you said it was 2020 when you may have presented something before. I'm sure this is night and day from where it was back then, just with everything that's changing. And I'm glad that we're looking at this. I think there's going to be a lot more change, a lot of disruptors, as somebody mentioned earlier. And I also like the fact that you're doing the experiments that you have.
Dave?
Great points have been raised already, and I just wanted to add one thought to this because it's a great presentation. Totally support the project. I agree with Klaus. This is, I'm sure, a never-ending journey, which is, in the long run, I think, good news, because we'll see how this impacts the way everybody in the financial reporting ecosystem changes how they do what they do. One of the concerns I've always had in this area is how expensive new technologies are, and that tends to, and I'll use a colloquialism that I know is understood in my jurisdiction, may not be understood everywhere, but that may contribute to the differential between the haves and the have-nots. That if you're a large multinational corporation or a large global professional accounting firm, you have the resources to invest in these products and tools and things that others may not have the ability to invest in. And what does that do to the landscape? Certainly one of the answers is what Galen said, which is that the local bodies will organize for smaller, medium-sized firms or entities, but there also has to be enough of a market for it for them to want to invest in it as well. So it's a challenge that needs to be considered as we go through this process.
Good point. I would note that Klaus properly noted I called on him in incorrect order, but if I was a bot, it probably would have been Paul that would have been called first. So I'm not certain I see any other hands, so you can respond or you can continue on.
I was going to just quickly respond to the point around that Dave made around the the sort of expense and the haves and the have-nots, because we have seen some research that's been done that doesn't necessarily indicate that that's one of the most significant barriers to technology adoption for smaller medium-sized practices. So, and Amy might mention it when we come on to talk about adoption a bit later. Amy might elaborate on that a bit more. But yeah, we're going to come on to talk about technology adoption, and you'll see that some of the things that have come through from some of the research that we've done around that. So thank you very much for all of your comments. If we can move on to the next slide. So what I wanted to do now was to provide you with some outputs from all of the research and outreach activity that we've been doing to really understand the technology landscape and the technology trends relevant to audit and assurance. And this is really building on that original research that Amy talked about. And in this diagram, it's as you can see, it's our audit and assurance technology landscape, and it's really a way of displaying those technology trends that we think are relevant to audit and assurance, and giving information about the relative maturity of those technologies, as well as insight into what our views are in terms of the significance of their impact on audit and assurance, and differentiating between auditor deployed and entity deployed technology. So there's quite a lot of information all on one slide. So as you can see, this diagram sort of stylistically is a maturity curve. And that's really on purpose to differentiate between newer technologies and ones that have been around for a while, and also those that are in a sort of state of growth and are increasing in profile and proliferation. And to the points that were made around AI, you can see there's a lot in there that are AI related technologies. Now, because I've got to fit everything into a single slide, they all seem sort of fairly clustered together, but the reality is obviously, some of them are significantly further apart from others. So it's really sort of about the relative position that you can see there. And what I've done here is I've used the sizes of the circles to reflect the impact on our views on the impact on audit and assurance. Some of this technology, obviously, that's very new. It's a bit of a sort of watch and see. But the larger the circle, the more significance we think it has to audit and assurance. And that's important to differentiate between those technologies that might drive efficiency in the audit process versus those that may completely disrupt the audit approach or really force a change in the audit approach. And the colours indicate whether technologies are used by an auditor or whether they are deployed by an audited entity or both. And again, this is particularly relevant from a standard setting perspective. And the example I always give is robotic process automation, which obviously can both be used by the auditor and the audited entities, but in different ways and with different sort of standard auditing standard implications. So the auditor using that technology might use it to automate routine or manual tasks such as work paper creation or sort of first draft of work papers. And that would have an impact, you know, when you're thinking about auditing standards on things like quality monitoring, so use of technological resources, maybe also if it's work papers on audit documentation. When we're thinking about RPA that's used by an entity to maybe perform certain accounting activities, this is more around, you know, from an audit perspective, it would have a bearing on our risk identification and assessment activities. So that's the sort of differentiator, or need to sort of differentiate between those two. Now, the phases here for the technologies are really designed to, as I said, reflect their maturity within audit and assurance. This doesn't mean that those that are mature are fully adopted in audit and assurance. And, you know, as I said, Amy will go on to talk about adoption. You know, you'll find that there are some technologies that will proliferate in audit and assurance faster than others, and some of them may never reach kind of full adoption. So as we update this technology, you'll probably see that some technologies might leapfrog others, depending on their different growth trajectories. So that's our technology landscape. And as I said, it's sort of updated from the original research that we did. So if we just move to the next slide, what I'm going to do is pull out just some of the trends that have come out of our research. So the landscape on its own only sort of tells part of the story. Now, the first one, which I've mentioned, is you know, around access to data, and that being a continuing challenge. And I remember from my many years as a data analytics leader, you know, I would never underestimate the complexity of this challenge with all of the various different accounting systems and, you know, different ways that data is structured. But there are some great developments in this area. So things like APIs, application programming interfaces, and other data extraction technologies, as well as data transformation technologies that are having a positive impact in this area. So it's, you know, it is developing, but not the easiest problem to resolve. Another trend, which again is quite consistently shared, is this lag between technology innovation and adoption. And again, I'm sure it won't come as any great surprise. And there's no single reason for this. We've mentioned on the slide here around people-related factors, and Amy, as I said, will come on to talk about this when we talk about technology adoption. But it tends to be a combination of factors. And I guess the flip side of, or the, you know, the sort of the alternative way of looking at this is, you know, the things that need to be in place to, you know, empower people, practitioners to adopt technology. So there are some, you know, some considerations from that perspective. Now, we've mentioned AI, and that is consistently identified, and machine learning consistently identified as most revolutionary. And those technologies are so far reaching and, you know, really, really broad, and both obviously technologies that are being developed and used within audited entities, as well as those used by the practitioner. And I've listed out there some of the areas that we're seeing or we're hearing where AI is beginning to be used within the audit approach. I'm sure you can't have missed all of the media coverage that there's been around ChatGPT. I don't go a day without seeing an article on it. And obviously it has been making headlines because people have been trying to do all sorts of things with the technology. For those of you that might have been hiding under a rock, it's the chatbot that was launched last November by OpenAI. And it's people have been using it to do all sorts of things, from answering exam questions to doing homework to coming up with fitness plans and summarizing stories, coming up with odes to the IAASB. And these large language models, I do think, are going to continue to evolve, and obviously they do present opportunities for all of us to enhance and drive efficiencies potentially in our work. But there are challenges with any AI technology, and I'm sure this this was mentioned. So things like having appropriate training data, ensuring there's, appropriate transparency and governance of training models, and establishing trust in those technologies, and being cognizant where they're used in an audit, that having a sort of being cognizant of automation bias. So again, I don't want to be negative about that technology, because I do think AI has huge potential to improve audit assurance quality. In regards to blockchain and related technologies, again, we get a very broad spectrum of views around its potential impact on audit and assurance. There's definitely potential there for it to be a significant disruptor, but it's, the nature and timing and extent of that disruption is quite difficult to gauge. Things like digital assets, though, cryptocurrencies and NFTs, non-fungible tokens, they are becoming more prevalent with audited entities and do present challenges for the auditor in terms of understanding risk and obtaining audit evidence around valuation and existence. And obviously, there's been a lot of media coverage in the cryptocurrency market over the last year about the various crypto company failures. And our most recent market scan was on digital assets, and with a focus on those cryptocurrency activities. And obviously, this has led to a lot of questions around regulation and the role of the auditor. And I'm sure this will continue to be an area of focus. But we all know that there's more that's going to happen here, and it's a case of continuing to monitor it to really understand the impact on audit and assurance and be prepared to react. Finally, and I've put this last, but I wouldn't underestimate the impact of this as we continue to do hybrid working and remote working. This does influence technology innovation, as there are new situations that arise as a result of sort of remote working situation. So things like remote inventory inspections becoming more commonplace, and obviously that drives technology innovation. So if we move on to the next slide. So at this point, again, I'd like to get reflections from this group about the landscape and the technology trends, and very interested to hear your thoughts on what you think is likely to have the greatest, which technology is likely to have the greatest impact on audit and assurance. So Jim, back over to you.
Thank you for that segment, and I'll look for cards or virtual. Thank you, Jean.
I'm going to help us out here, Jim, and go first again. Amy, as you identified, I think as we think about this, and we don't have a crystal ball like anyone else. A few years ago, we would have been talking about blockchain, and obviously that's not as prominent now, but just thinking ahead in terms of what may have the, let's say, highest potential to impact the audit and assurance landscape. It currently looks like artificial intelligence, which you have certainly identified already. We've been thinking about things such as, and this is getting a little farther ahead, but I think Tara brought up the sustainability landscape, but at what point do discussions surrounding absolute assurance versus reasonable assurance, given the capabilities of AI to an entire population? I'm not suggesting we're there now, but just thinking about the capabilities of AI, something to think about, things such as AI learning from various fluctuations to use during risk assessment. We just see a lot of potential currently in terms of AI being a disruptor, but I recognize you're identifying that as already as well. So thank you.
Thank you, Jean. And I just have a curiosity, so I'm going to ask Barb Vanich if PCAOB is doing anything in terms of technology And you don't have to answer that right now because I'm going to call on Mike, but we'll give you a chance there, Mike.
Right. Thanks, Jim. I really like the presentation where you had the various technologies shown and highlighted in colors. Two of them that I noticed down in the emerging area. One was regarding digital assets, and I think about FTX, and it showed right now digital assets obviously are being used by the entity, but if these are going to be more and more regulated, there's going to probably be auditor technology that's going to have to be involved in trying to determine what those digital assets are and whether they exist or not. And then the other one was the comment made earlier by someone that talked about the SOX audit and internal controls. And I noticed again down in that area in terms of emerging things, just that fact that discussion was there. I know in my former firm, we were looking at things already that would allow companies to be using artificial intelligence and other parts of technology to, in fact, verify that those controls existed. So those, I would point out, are definitely things you had on your radar. I'm glad to see them there.
Thanks, Mike. I have the feeling we're not going to go back to 8-column paper and green pencils. Conchita.
Thank you. I'm pleased to know on the coverage cited, but citing on my own exposure and probably limited knowledge, I know that IT has a lot to say in facilitating audit now, that there are actually applications or programs that are licensed, that are actually within reach by the small practitioners available in the market. So indeed, we have to work faster to catch up, because it has been there and it has been enhanced every day, every hour, and we will do a lot of catching up. Thank you.
Thank you, Conchita. Paul, I'll call on you first. I see you and Klaus have their hands up.
I really found this technology landscape on slide 7 very interesting. I think it's pretty complete as far as I can tell. The one thing that struck me, I was looking all the way down at the bottom left, quantum computing appeared to be low impact. And I think that's probably a good assessment by itself today. But thinking about, I guess, using the analogy of risk assessment and risk management, where traditionally risk maps have had risks plotted as individual points, but in fact, there's a lot of interrelationship between risks, and therefore one can trigger another. I think you're going to find the same here. And for example, quantum computing, as it starts to take off, could greatly accelerate artificial intelligence and where that goes. Our quantum computing may create encryption and decryption issues that could impact cybersecurity, digital currencies, things like that. So I think one of the challenges will be is obviously continuing to keep a landscape like this, but recognizing that there will be interrelationships between some of these that could cause one to accelerate its movement up a curve, as well as maybe increase in impact.
Thank you. Thank you, Paul. Klaus?
Paul just said what I was going to say, so I'm going to say it in other words. To answer your specific question, it seems like AI for the moment is the technology that's will have the greatest impact. That's the low-hanging fruit, so to say, it seems. But I really also like to commend you for this paper on the technology landscape, this picture. I think it's absolutely great to catch it. And I think in the line what Paul is saying, I think that the real challenge is here, the constant development of technologies will be the most disruptive thing. So once you have implemented something from the audit and assurance side, and say, oh, great, now we know can catch what the clients are doing. Because of innovation and then technology adoption, there will be something new. So I think this is, I've never seen very few of these pictures that try to catch this development, but that things is telling the whole story. So my conclusion in line with Paul will also be that this will be the biggest challenge, the biggest disruption.
Thank you. Barb, any perspectives from
Yeah,
your group?
sure. I mean, I also enjoyed the presentation, so thank you. And I mean, I think this slide is for the most part consistent with what we see. We did add back in the fall a project to our standard setting agenda that addresses certain aspects of designing and performing audit procedures involving technology assisted data analysis. And this package of amendments, as I'll call them, is based on the past few years of research that the staff conducted. And what we've seen as the use of data analysis in the audit has increased, it's informed our thinking about certain areas where additional guardrails would be appropriate to ensure that certain risks related to the use of data analytics are consistently addressed across firms, and that when used as an audit response, result in sufficient appropriate audit evidence. Over the years, we've also identified some areas where auditors believe that standards could be clarified to better address data analytics as it's used in the audit today. In some cases, we've made those clarifications through some of our staff publications, but in other cases, we think it might be appropriate to make minor amendments directly to the standards to make those clarifications. I think we, like you, foresee a research project on data and technology for a long time to come, because as people have acknowledged, technology is ever changing, and it's very interesting to watch. The other thing I'll mention is back in the fall, the board formed a new group, which is a Technology Innovative Alliance Working Group, and that's sponsored by our board member, Christina Ho. And that group is comprised primarily of technologists who will advise the board on the use of emerging technologies by auditors and preparers, and also make recommendations to the board about our existing or oversight programs and how they might better address the use of emerging technologies. I think that's pretty much it, Jim, but thanks for calling on me.
Thank you, Barb. That was helpful. Greg?
I was just going to say, so to Barb's point, Amy and I actually had a call with Christina last week, and it was very good. And actually, she's some of the people in the Innovation Alliance Working Group have volunteered to be involved in our thought experiments. So really, useful to be collaborating together on that. So thank you.
Thank you, Jim. By all means or no means am I a technology expert, but a lot of the items on the landscape to me appear to be inputs to information. And I wonder if what may be missing is consumption of information. And the one that comes to mind for me is use of social media and how it impacts what's seen as useful, what is used to make decisions, what the expectations are for the extent of information, the speed of information, the reliability of information. So when we think of GameStop and the impact that we saw from Reddit, I wonder if consumption of information or how the end user is making use of information in the market is affected by technology should also be considered in the roadmap.
Good point. Thank you. I saw another hand. Hilda?
Thank you, Jim, and many thanks, ladies, Danielle and Amy, for your presentation and the great insights that you have gathered until now. And I hesitated a lot to put up my hand because what I am going to say sounds extremely old-fashioned, and it's not at all as sophisticated or mundane in comparison to what you have been presenting to us, which for sure is what we have to look at in the future. If I look at what we in Europe are faced with, which is coming from our legislator, it's what I would call audit of or assurance on digitally enabled reporting. And this is where we have been trying to find solutions. Most of the time we have been using IAASB 3000 to find a response as to how the auditor could respond. And these are things which are like what is called SF, European Single Electronic Format, which is actually IXBRL filings that need to be done on what is actually the information in the financial statements. And there is a audit requirement on that, first on the financial statements and then on the disclosures. And so we didn't really have a standard within the IAASB seat specifically to that. So Accounts Europe 2 years ago, we actually issued some guidance which is based on IAASB 3000 to help practitioners to do this work. And now we will potentially have the same with the digitalization of the sustainability reporting, where there will be taxonomies that will be issued, again based, we expect at least based on IXBRL, where a first assurance and then audit on those filings, on those digital filings will be needed. And a new thing that we have is what is following from the Digital Services Act, which actually is looking at platforms, digital platforms, and whether they are in line with certain fundamental rights requirements, whether they are in line with equal level playing field or equal opportunity, I would say benchmarks. And there is an audit requirement that comes with this. So it's still being considered how this will be done. But again, our profession is asked to do assurance or audit work on that. And as I said, it sounds very unmundane, but that is what we have on the ground. As I said, for the moment, we try to work with IAASB 3000 around this, but sometimes it is quite a challenge. And so we have other matters that will come. For instance, we have something like SAP, which is European Single Access Point. So it is the access, the harmonized public access to reporting. There is no audit that will be required in first instance around it, but this is most likely going to have impact on how actually reporting is packaged in a digital way, and then potentially it will have an indirect impact on the auditor looking into that and auditing that. I just wanted to provide that background information to you to give information or to give an insight on what it is that in certain instances auditors are still grappling with, which I think little by little we get to grips with, but still it's on our to-do list to look at and to have an answer to. Thank you.
Thank you, Hilda. Galen?
Thank you. So a lot of this discussion is sort of focused on external practitioners and companies and so forth. But what about the internal side of it? I'm wondering about, and one of the thoughts that I had goes back to a conversation Bart brought up Christiana Ho, and I was talking to her about something called Scrum, and I've talked to James Gunn about Scrum as well. If you're familiar with it at all, it's about teamwork, and it's not really technology per se, but the analogy is rugby, where you move you move standard, you could move standards forward maybe more efficiently. And to what extent are there opportunities to adopt that internally within our boards? I think we shouldn't just think in terms of digital progression. There's management progression as well, and to the extent that we can utilize some of that, maybe we see how it works internally and then see how it could be impacting externally as well.
Thanks, Tom.
Well, Galen, we've been actually importing agile techniques to standard setting over the last 3 years, which has driven a lot of what we did on LCE work. It was our first big experiments. The whole concept of the reference groups that we're using is user acceptance training. I mean, user acceptance testing, with also the idea that we're going to break things into bite-sized chunks. We're doing the same exact thing to some extent on sustainability and get it out to the market and testing. Like the idea that we're going to go into a room and develop a standard by ourselves for 3 years and then hope it works for the marketplace, just I don't think flies with what we see in the innovation marketplace. So we are, well, Scrum, we're not created Scrums, but we are taking elements of agile techniques for software development and applying it to standard setting where we think could be useful.
Thanks, Tom. Christian?
Yes, thank you, Jim. Just one more comment. I think the more the subject to assurance or audit engagement becomes a digital format, the more the response needs to be a digital response. Hilda mentioned ASF, that is one thing, but if you look at sustainability reports, also if our clients, the preparers use digital data as input data, which then needs to be considered as evidence going forward, it's also a matter how to respond to that kind of digitalization. So overall, I think this is going the right direction, but the further the preparers use analytics and these kind of things, the more we as audit response need to go the same path down the road.
Thank you, Christian. Well, there's a lot of comments, Danielle and Amy, if you'd like to respond.
I was just going to say thank you very much for your comments. There's some really useful points, and Hilda, I know we've seen the emails that you sent to us highlighting the Digital Services Act. So we will definitely continue to keep an eye on that area. I am conscious of time because we've got another quick segment that we want to go through. So I'll hand over to Amy to cover that.
Thanks, Danielle. Yeah, I think we've got about just under 20 minutes to cover this. So I'll try and go through a little quicker than we'd planned to give you a chance to give some input. So we'll start off, we wanted to share some insights about technology adoption. So this slide summarizes some of the findings from a literature review performed by members of the IAASB relating to digital transformation and external audit. And a summary and a link to the full paper is actually linked to from your slide deck in your presentation, so you can go and look at it. And the research identified different factors which affect digital transformation, categorized them into different categories, so person, task, and environmental factors, as you can see on the slide. And these were the themes that positively influenced adoption. So maybe some of the bigger takeaways. Firstly, person-related factors were found to be the most significant thing or category affecting adoption. So identifying training skills is an absolute necessity, but more broadly recognizing a change in mindset and the need to be adaptable and agile are key given the ever-changing nature of technology. Audit firm culture, engagement, economics, and confidence in audit quality value are also seen as necessary foundations for adoption. In regards to environmental factors, as we know, investment in and development of technologies varies from jurisdiction to jurisdiction, and we did talk about that a little bit earlier. Also, it varies from firm to firm, from team to team, from client to client, but In particular, the research found that smaller firms experience different challenges to larger ones. And perceptions of stakeholders, such as regulators, the expectations of clients, and also the availability of the talent, the necessary expertise to be able to deploy and leverage technology was also found to impact adoption levels. And finally, some task-specific factors that impacted adoption. And this is really about being able to find and to use the right tool for the job you're trying to do. So you're in an audit setting, it would be your audit objective. And so understanding outputs and avoiding things like automation bias, as well as availability of appropriate data, and we've discussed before earlier today, all impact the adoption of technology. Maybe the biggest takeaway, there's a lot of factors here, but what the research really indicated was there was no single thing that prevented adoption of technology. It's really a combination. So if we move on to the next slide, we also then had a discussion with our forum of firms, which includes representatives from international and regional networks of firms that perform transnational audits. And we provided them an update on our activities on technology, similar to what we've done today. We provided them last November. And as part of that session, we thought it'd be interesting to do some polling regarding what they are seeing with regard to adoption technologies and some of the benefits and barriers regarding adoption. So a couple of things to note, because we get these questions around the results. We did provide representatives with the questions in advance. We did give them some information as well to help them with some of the terms, because they're not always consistently used or understood. And then we actually did this polling just live in the session. And it was anonymous, so we hoped it would help us to get more honest answers. And the other thing to note is just how the results are structured. So the dot, if you look at the diagram here, the dot with the number shows the average response, but you can also see in the background the range or the spread of the answers. So if you look at the very top of that first diagram, the average, the mean response was 4.6, but you can see that many respondents, for instance, answered right down at the left, they weren't seeing widespread use at all, and others answered that they were seeing very high widespread use. So I think it's kind of interesting just to be able to get that insight when considering the range of responses here. A couple of points of interest we wanted to point out. So starting with technology, the use of technology by auditors. As you can see, data extraction and transformation technologies were the most prolific, while more complex technologies like process mining and AI-related tech, which we've talked a bit about today, still has a way to go before it's more widespread or mainstream. We were a little surprised by how low robotic process automation was being used. This is a technology that's been around a while, and there's good opportunities to drive efficiency in the audit process. But the feedback we heard was that the rules-based nature of this means it can be hit and miss, and that's put some firms off kind of investing heavily here. And similarly with audited entities' use of technology, so their own use of technology, there were some areas that we expected to be higher, so things like robotic process automation and data analytics. But then also technologies like Internet of Things was higher, so IoT on the slide, was higher than expected based on our research, so could be impacted by certain industries, of course, as well. So if we move on to the next slide. We could move on to, thank you. So moving on to the responses regarding the impact of technology and audit quality, we did have some interesting, some unexpected responses here as well. We've often heard from practitioners that the use of automated tools and techniques for risk assessment is widespread, but it isn't used as significantly in substantive procedures. And the results here kind of indicated that people are seeing quality benefits from using technology, but likely for activities such as enabling analysis of full populations or better identifying risky subpopulations or items for audit testing. Probably also interesting that client collaboration and project management is third here. So moving on to the barriers to adoption, costs and reluctance to change came out on top. I know we've spoken, it's come up a little bit in the presentation. Closely, perhaps unsurprisingly, now cannot speak, closely followed by training and skills and then access to data. I'll quickly cover and address what Danielle referred to earlier regarding some other research. So the AICPA's Auditing Standard Board also has a technology working group who did a survey on the barriers to auditors' use of technology, focusing more specifically on SMPs. It's quite interesting. They looked at reasons for adoption and not adopting by technology type rather than asking overall. And there were some similarities and differences. But it was interesting that too expensive or actually even availability of data weren't coming up as the #1 reasons. And instead, the auditors were identifying that it just would not be useful for their audit or, again, and then lack of training and infrastructure. So it's interesting that there was some overlap there, and we thought that was quite insightful. So our final thing we wanted to cover was around addressing the barriers. So response is quite interesting here. Education, including education for regulators and standard setters, which you may have heard before. There's also suggestions around closer audit firm and network collaboration and cross-sharing. That was quite interesting, as expressed by a few participants, and probably reflective of the group, and the strength they see in the former firm's network. And probably a final reflection on this, it probably does also reflect, recognition that this is a broader challenge that requires a collective response from all the stakeholders, in the audit and assurance area. We often hear about the desire for case studies and examples and best practice and guidance. And we've talked about some of the activities that we've done today that, we're doing to address this, but there's definitely kind of a collective effort, for example, to share what good looks like, what best practice is, and working with others to address the problem. And maybe, of course, in terms of specific actions for us, we also have to recognize that the IAASB, our resources are finite and our primary role relates to standard setting activities. So even non-authoritative guidance is time consuming in terms of resources. So I think that leads me nicely on to the last question. So what we're really we're looking for is your views on the barriers to adoption. I know a couple have come up already, and how they might be overcome. On that last part, the answer can be more general in nature, but we're definitely interested in what specific actions may be taken by the IAASB. So what actions are appropriate for us to do, I think would be really useful for us to hear. So I'll hand back over to you, Jim.
Thank you. Paul?
Thanks, Amy. Thanks, Danielle. On the previous slide, you put in bullet form some potential ways of I can't remember now how you described it, how to address the reluctance to adopt technologies. One of them was education, and I think in brackets you said something like regulators and standard setters. I also wonder whether a lot of this information that you've gathered is very fascinating stuff. It really, I think, I would just impress on the need, if it hasn't been done already, to put it into the public domain, because I think this information might be very useful, for example, for commercial providers of technology product on which the SMPs typically rely. A lot of SMPs aren't going to be producing much, if anything, in-house. They're going to be kind of taking technology off the shelf, so to speak, in the old parlance. So I just wonder whether this kind of information is just useful to put out there more broadly, as if to say, look, here's some of the reasons why perhaps certain audit firms or small practitioners may not be picking up on technology, and just see what they make of it. They may adapt product in order to kind of address these issues.
Thanks, Paul. Jean.
So I'm going to continue a little bit on Paul's thought and bring in the ASB survey results, because I saw that a little bit. And the thing I was struck by, and I think it gets to Paul's education point and whatever can be done to impact, I'll say, longstanding assumptions and practices by those who have been doing things for a long time in a certain way, and sometimes are a little bit reluctant to change. So what I recall from that survey, because I was very surprised by the results, but given big firm, small firm, not shocked, because there are different challenges. But if I remember correctly, the average tenure of the people responding's experience, the average was 23 years, something rather high. And so when I saw it, I thought, okay, this is reluctance to change, not necessarily informed. And so for those who missed that little data point, assuming I'm remembering it correctly, I think it is an important point to bring up. And so find the youngest, most innovative people to work on this topic, and perhaps the speed of change could be a little bit more rapid.
Maybe I'll quickly jump in there. You're completely right. There was an average of 23 years auditing experience. The results are on the IAASB's site. It's in with the meeting materials for the January meeting. So there is some interesting information there if anybody wants to go and look at it in more detail.
Paul, do you have a follow-up, or your card's just up? Anyone else? All right, any final thoughts, Amy or Danielle?
No, I don't think so from my end. I think you know, we're always looking for, I guess, input in this area. It's ever changing. You know, things change so rapidly. You know, we've already identified that we spend a lot of time doing a lot of the outreach and looking at what NSS are doing and talking to regulators, and you know, we do a lot of work in this area. But if there's, you know, things that people in this group want to bring into our attention, think would be useful, don't hesitate, because as I said, there's just a lot going on, and it, you know, it's difficult to try and find the things that are relevant to be able to kind of pass on to our staff, to our board members. It's ever moving. So it's maybe just something I wanted to end with there.
Well, thank you very much for the presentation. We appreciate it. Thank you for spending your time with us this afternoon, and all the work that was done to complete it. And I think this will conclude our meeting. We have some closing remarks. And in terms of closing remarks, I'd like to see, Tom, if you have any closing thoughts on your own.
No, I just want to thank everyone here. We've got a lot of really valuable input that will, I'm actually sort of glad we have a week off in between this CAG and the board meeting, because it'll help inform the way I read papers too, going to our board meeting. Clearly, we're spending a lot of time on sustainability now, and it is crunch time. We need your help in two ways. One is to participate when we do have the consultation process, but also to take what you heard here and what we're trying to do and communicate it to people in your stakeholder groups or in your jurisdictions, to make sure that everyone is fully informed of what we're trying to do to get to the ultimate goal, which is a global baseline for assurance for sustainability information. And I think that that's hard to disagree with, but getting there will be challenging. The technical part, to some extent, is the easy thing, but managing all the dynamics and timelines and policy demands is the harder thing. So any help you could give in that front, it would be much appreciated.
Thank you, Tom. Dave, any comments from PIOB?
Yes, thanks, Jim. First of all, Jim, excellent meeting. Well done in putting this together, and congratulations to all of the board and the staff for putting together excellent material so all of us could prepare, but also great presentations that then solicited the great dialogue that we had over the past 2 days. And I just want to say thank you to the CAG again for your active involvement throughout the 2 days. This is such an important part of the process of gathering information that informs the standard setting, but also our review at the PIOB of the public interest elements of standard setting, so that we all play our role effectively in putting out the best product we can for the public. So thank you to everybody.
And Dave, I think I'm going to echo your thanks. I'm going to thank the members of the CAG for their attention for 2 or 3 days, depending on which days you were here. We had a very good discussion on a number of topics. And I do know, because I attend the IAASB board meetings, that they are listening and our comments are reflected. So your comments are definitely heard. Of course, I'd like to thank the task force presenters, the task forces, and all those involved. It's a lot of work, as you can imagine, to present. So we appreciate that. And finally, I'd like to thank the staff, which there's so many that make this meeting possible. And thank you for everything you've done for us. And speaking about us, we will have our next meeting, September 12th through 13th. And I look forward, it is going to be an in-person meeting. And I look forward to seeing everyone and continue on. Thank you and have safe travel.